It's been dropped in the live chat right now. Get 25% off the Discord VIP service where you get access to every trade that I am taking in the markets. Also, we'll extend that here for Chris Pulver's trades as well. We'll do a special discount today for the FOMC meeting stream since we're going to be here all day long. If you guys would like 25% off of my trades or Chris's trades, if you're an existing member, we'll also honor that to you as well. 25% off Chris Pulver's trades or myself. Speaking of Chris Pulver, if you don't know who he is, don't go anywhere. We're going to let him take over the show here in just a second. We got Pulver Alerts, the man himself, coming in right after this quick break.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
What's happening, everybody? Happy Wednesday. I'm actually just getting a trade up and running for the SPY. I want to talk about that right now. So SPY, this is a Friday expiration, so 10-11 expiration. I'm buying the 569 put, I'm buying the 568 put, and I'm buying the 567. I'm going to go ahead and take that trade with you live here in session. That would be a debit. I'll go into this account right here. Let's go 569, 8, and 7. Right now, that is adding up to about a 360 debit. See if I can save a few cents. $1.43 plus $1.21 plus $3, 367. See if I can get like 36D. So let's try this one here. 360 not filling. Let's go 365. Oh, you turds. 370. Looks like price is turning bearish. Try to get 375 here. Filled at 373. All right, total debit 3.73 filled. Then I'm going to calculate. I'm looking for SPY to hit 567 price level by Friday. Earlier is good. And then I'm going to set my take profits here. So I'm just typing this in as I'm taking the trade. That's a 569 long put, 568 long put, 567 long put. Got filled for 373. And I'm looking to see if price will make its way down. So right now we need price to move about, it'd be about, is that right? $6? $6.80. So if we go $6.80, and we're talking about a 28, 24, 21 delta, so times the 28, so that's $1.90. And $6.80 times a 24 delta, $1.63. I'm calculating roughly what my break even or my profit target is going to be, and then $6.70 times a 21 delta is $1.40. So if I add $1.40 plus $1.63 plus 1.90 to the debit that I took, 3.73, I should be able to close this out for 866 credit. So I'm going to go ahead and put in. I will insert a pending close order for all three long puts at 8.50 credit. This will be a trade that I monitor as price. If price cooperates directionally, I want to see the SPY push lower to 569, 568, 567 area. Okay, so I'm going to go ahead and insert this trade. So SPY right here, 1, 2, 3. I'm going to close out these orders 8.50 based on my calculated. Yep, 866 is what I should be able to get. I'm going to put in 850 to see if that's good enough and take that as a credit. Okay, so that trade is in. Let me get a screenshot of this. Let's go SPY. And 567 is right here on the SPY, right at these lows. So looking to see if we will basically reject off of resistance. So I'm going to put in a horizontal ray right up here. Let's make this nice and thick. And look to see if price will reject off of it. So if we see a screenshot, here we go. All right. So screenshot coming in, put this in the Discord for the Pulver alerts. There we go. And we are in. Okay, so I put that in the index trade section of the Pulver alerts in the A1 Trading Discord. So that trade is in. I actually filled earlier at a worse price. So doing this now with all of you, you get a much better price. You're saving about $1 off of that. You don't have to take all 3 trades. You can just take 1 trade. The reason I like it is because I'm watching this gamma squeeze index, and I've got this nice strike price around 567. Now, full transparency, the current level has dipped from about 810 down to 790. Not that that's a huge coincidence, but it is showing that there's a little bit of volume that may be leaving the short side right now. So anyway, that's the trade. I did this out to Friday because we do have FOMC minutes today. We do have CPI tomorrow. If there's any type of disappointment out there in the markets, I do think that we're kind of priced to perfection at these highs. Obviously, the market can break the highs and keep just freaking going higher. But if we have a lack of support for the market to go higher, and we have resistance, which has been now about 6 or 7 failures at these highs, if we reject again and then fail off the highs, I do think that the market can make a mean correction to the downside. So that's what I'm playing. That's what I'm going after, and I'll keep an eye on that. Okay. All right. So that is the SPY for right now. Let me get rid of that line. I don't need that to be on the chart right now. Got chart alarm set instead. That's the yellow box around 567. Right in there on the SPY. I've got a chart alarm set at 569. Just give me a heads up. And I do want to take a look at some earnings plays today. If Frank joins me, we'll price out, or I will price out regardless. Domino's Pizza, Delta Airlines, take a look. I was looking at Carvana yesterday during my live session at 3 p.m. Number one, Carvana's up like 3,000%, which is insane. Their earnings report showed a history of like 30% movements, and that's also insane. But anyway, I was considering an actual trade on Carvana with earnings, but their earnings aren't until November, I think. Let me take a look. And then, spot checking everything today. New Zealand dollar. So the RBNZ did cut rates. So they're down by 50 basis points, and their currency's been getting hit hard since 9 p.m. last night. So the New Zealand dollar is getting hit the worst. Dollar's on top right now. Japanese yen slightly weaker. So interesting flows we have this morning. Dollar and Swiss slightly stronger. Aussie at baseline. New Zealand getting hit pretty hard. The Aussie New Zealand has turned up once again. And I'm looking for maybe a resistance level to hold, but that takes away some of that carry trade differential between the Aussie and the New Zealand. So let me have a look here. All right, where's my... All right. So dollars up. Let's take a look. Oil still pushing a little bit lower, down 2.92%. This oil stuff is the real deal. There's a lot of volatility here in oil. Gold also starting to roll over nicely. This is what we wanted to see. I mean, I'm hoping nobody's getting upset that gold has rolled over a little bit. There's still more to go, and I hope that there is. So dollar showing some strength. Gold is rolling over. I like this gold position sitting right around 25.50 or slightly lower to get in some credit spreads. I'll probably play GC for that. Maybe even add a few more shares into GLD. Silver holding right off the trend line, and also I'll be watching this 50 and 100 period moving average as well. But if it holds here, that's a good sign. Bitcoin slightly turned softer. MicroStrategy was really close to those recent highs, fading off those highs slightly, 198 down to 191. Ethereum still underperforming, need to get back above 2,800. Copper's turned down. You know what I'm going to do here with this China stuff being uncertain? I don't think I got filled in my copper trades yet. I'm going to cancel that position. So if you're in my Pulver alerts, I'm going to cancel this trade. I'm trying to get filled at a 0.025. It's trading for 0.021 right now. And I am good just staying out of copper for a moment. Because I think that this whole liftoff to the upside was boosted by China. And with China kind of uncertain right now, I mean, all the stocks in China down again, some violent pullbacks. I mean, HSI down to we tagged nearly the 50% swing. Alibaba's trading at 23%. Baidu's down to the 38%. FXI back down to 30%. K-Web down to 30%. MCHI pulled back. I didn't put a fib on this one. This would be a low to high around 38%, almost 50%. And then JD around 30%. These are going to be really important levels to hold and see if price goes back up. So rather than taking that risk on copper, I'm going to go ahead and cancel that trade. So I think I have this for everybody here. 1, 2, 3, 4, 5, 6, 7, 8. So I'm gonna cancel this copper trade. It was a 1-to-1 and 1-to-1. It was like a $625 risk for a $625 reward. I'm just gonna hold off, and I'll get into copper with something else later, or just avoid the potential, geopolitical stuff that's going on or the China uncertainty. So I'm gonna go ahead and just cancel these trades. So canceling there, canceling. Okay, so to make sure those are all canceled. So now, HG all symbols, HGZ. So these should all be officially canceled. Yep. So 1, 2, 3, 4, 5, 6, 7, 8, all canceled. Good. So I'm going to update that one in the futures trade section. I put that one in. I do. Must be a commodity. It's commodities trade. Is it commodities trade? Well, I'm looking for it. It's either in futures or commodity trades, but I'm thinking it's just in the futures trades. So I'll make a note of that. I'm just going to update in the trading chat here for A1 trading. So futures trades, update /HG, canceling HD credit spread, bull put spread, updated 10/9 during live session. All right, so getting rid of that trade. Let's talk dollar, oil, gold, silver. Dollar catching a bid again today, making some fresh highs. I have this box. I extended this yellow box in the dollar. We look back to 2023. We have support. We have support. We have support. We have support. This was a bear trap written all over it. It is squeezing to the upside right now. Dollar looks to be catching some bid into this inefficiency. I see this pulling back. I've said about 103 to 104. And I had this initially like right in here as a level of resistance. I'm going to go back into this little inefficiency right around this 103.90 to 104 zone. Now, I'm not calling the top on the dollar. If the dollar is just going to keep running and running and running, if we breach all of this yellow box here, then this is possibly a reversal for more upside, more range-bound trading on the dollar, which would make things a little bit more difficult. But if this is a run into resistance and this turns south, well, that's still a trade that I'm interested in following. Okay. All right. So I still want to watch the dollar closely. If anybody is long the dollar, you've had a pretty good stretch. I mean, Aussie dollars dropped hard. New Zealand dollars dropped hard. Euro dollars dropped hard. Pound dollars dropped hard. Dollar CAD has been all over the place. I still have a trade I'd like to put on the dollar CAD. This is one that I'll be willing to place here. I mean, dollar CAD's heading back up again. I hate this currency pair. I don't hate it. I actually like it a lot. I just want it to give me a level that I can trade. So dollar CAD, I'm looking for something to buy around 132, to sell around 140. If this is a high, low, and this is a pullback in here, maybe there's some structure to then sell back off, but I don't know. I'm not calling a top here. If anything, this is probably better for some type of pullback and heading back up to the highs again. I mean, I would say the Canadian economy is weaker than the US. I'd say that the CAD is weaker than the dollar. And if oil prices after that short squeeze start to fade again to the downside, then we're likely going to see, dollar CAD head back up into the 139, 140 zone. So just keep an eye on that for a minute. Okay. On point with the DXY reversing. Yep. So that's what I'm looking at. I mean, I just think it's likely going to drift a little bit higher. I think 103.50 to 104 is the potential like stopping point to see if the bears are really going to take the dollar down and get some risk appetite. We got to push the dollar lower if we want to have some risk appetite. Okay. I mean, oil, really volatile here in oil for the last couple of weeks. I mean, we ripped up from these kind of equal lows about 15 to 16%. That was an 18% move to the upside, and we've quickly dropped. I think we're in double digits now. We've dropped about almost 8.7%. So that's a lot of swinging on oil in the last couple of weeks. Natural gas, same type of thing, falling back a little bit, not as aggressive as oil, but I'd love to see natural gas somewhere back in $2 and then actually look at some credit spreads on natural gas. But view right now on oil, I'm just going to stay out of it because I think my concern is fundamentally oil was getting weaker before we had the escalated tensions in the Middle East. So that still prevails, and to me that kind of overshadows what we've been seeing in the short term to the squeeze. This was a squeeze, but fundamentally oil was down because there was a slowing global demand. And then Saudi Arabia spoke up and said they're going to drive prices lower because they want more market share. That's what concerns me. So if you want a low risk trade, I still like this area as a, buy low, super tight stop loss and see if this level holds around $65. But if it gets below 65, I wouldn't be surprised if we have a breakout down towards 55 or even $50. Okay. So this is a critical support level. And if it breaks, just look at it this way. If this was sideways from, let's say $90, it's slightly above that, but $90 to $65, we have a $30 range. If we break 65 and go down, could we get to $40? Could we get to $35? You bet. We could get a $30 range and we could just have that equal level breakout. And so a symmetrical breakout would be around $30. We could be talking about oil at $30 or $35. So that's what I'm saying. If we like to look at this as a line in the sand, I'm not trying to take some undefined risk trade on oil. It would be a credit spread if it stays, and if it's wrong, I might even consider, flipping directions here. But I'm just trying to stay the heck out of it. Right now I think it's noisy, it's uncertainty. There's a lot of other stuff going on in the background. I mean, clearly the U.S. is going to want to see lower oil because if it sees lower oil, that's going to keep the inflation numbers contained. And I think that is also happening in the price action right now as we're seeing a lot of protection towards like lower oil prices, keep the inflation lower. Don't let the readings get too high. And the readings coming up, tomorrow, right? So I think that's a huge concern. Nick and I talked about this yesterday on the show. If oil is, current levels, it might be favoring a Kamala Harris presidency. We get above $80. I think that favors a Trump presidency. We get below $70, then possibly getting more, more in favor. But it's like one chart you could watch to see like perhaps, based on this price and the story about inflation could be who determines or what's determining the election. So we'll keep an eye on that one. Thoughts on Tesla and Robotaxi? Well, I saw something. Didn't Tesla get hit pretty hard? Tesla's down from 265 down to 246. When is Tesla's earnings? October 23rd. So a couple weeks out for earnings. Robotaxi stuff, I don't know. I mean, I'll trade the technicals on Tesla. Right now, after this high to this low, and we're clearly looking at some wedge trading right in here. I could see Tesla being really, really noisy, right? I would love to see Tesla actually drop hard and see if we can get some scoops down here near the 160, 150 handle. I do have some trades that are likely going to expire for full profit. I've got like 130 by 115s. I got ratio spreads. When we sold off heavily this would have been earlier this year when we sold off a lot. I was pretty aggressive on getting some Tesla exposure, and this upside is giving me most of those profits. I'm like, 75, 80, 90% profit in a lot of those trades. If they're so low, I'm probably just going to keep the trade all the way to expiration. Okay. But point is, I mean, I'll look at this. If Tesla is up into open space above 280, I do believe that technically Tesla is capable of hitting all-time highs at 400. Okay. The issue is if Tesla is going to go up, I would want to see Tesla and the entire stock market going higher. That's my concern. If it's just Tesla that gets to 280, that might be a fade. Okay. So what I'd rather see is if something can short, if we can see a gap lower in Tesla, I look for a gap, then a stabilizer, and then a gap fill. So I don't mind trading the gap fill. I'm hoping that we actually get something to push Tesla lower. And I'll probably start doing some credit spreads to fill the gap, or maybe even doing some, maybe even a debit spread. That'd be pretty easy. If we did like a 200 by 205 and trade it back to the gap, we give it a month or so. It's usually what it takes for a lot of these gaps to get filled. So I'd like to see Tesla gap lower, and then we can look to fill the gap again. But earnings will probably be that catalyst late October. Okay. Gold, we talked about gold. Gold's actually pulling back, and this is good. We've been wanting to see gold pull back for a while. So gold's pulled back to 26.08 from highs around 26.84. I'm still looking for gold to settle into around 25.50 or lower. If gold continues to drop lower, watch the dollar index as well. That's been a pretty decent correlation. Dollar index has been up. It doesn't look the same, right? I mean, the dollar index has made a rip to the upside. Gold is just starting to roll over. Okay, just starting to roll over. Now, I like the dynamic trend lines here. This is a 50 EMA and a 100 EMA and a 200 EMA. I like those levels as opportunities to either one, if you're short, you can target those areas. If you're long, like I want to be, I'm just going to wait and see if price will close below and then close back above and then establish credit spread, or actually buy some more shares of GLD and get long. Okay. So I'm waiting to see if gold will settle back into some of these areas. And I hope that it will. So 2550, 2500. I'd love to see it bounce off the 50 and the 100 and then find a nice little level of support. So if we can kind of cushion the blow in here, pop back up, add in a bull call spread or a bull put spread, get to the highs, or you can just buy some shares of GLD, add some exposure, and then we're hopefully looking at higher highs later on. But gold's made a pretty good run. I mean, gold's up 25% for the year. Silver is actually outperforming it slightly, but gold is outperforming the broader market, which is pretty impressive. I don't know if that's a good or bad thing, but if you're a gold trader, it's been pretty good. Okay, silver, same type of thing. Silver's pulling back. I'd like to see it stabilize right in here around $30. If it gets too aggressive to the downside, there's still really nice support at 26 that I'll still position on. But I'm hoping that this structure is actually what I have drawn, which is a break retest, and we just stabilize in here, and then we can go back up to a measure move around 35 to actually it's closer to $36. But it's important to me that silver doesn't have too much more downside. Okay, New Zealand dollar. New Zealand dollar is just dropping like a freaking rock. I don't know what you want to do with that right now outside of wait. I don't want to do anything with this right now. If there's any type of meaningful pullback, then there might be another sell opportunity. But I mean, honestly, this might go just from straight resistance down to support, and that to me is a buying opportunity. So I would wait. I mean, if we hit 58.60 or 58.50, I look for a bounce on the New Zealand dollar. Otherwise, in the middle of this, when it's bulls and bears and all this noise, I don't want to trade that. Your opportunity to trade the New Zealand dollar was here. You had resistance, and it turned hard, and it's been selling off ever since. So once we hit that 63.70 level, it's down 300 pips. But if you didn't short resistance, you're just chasing this thing. So I'm not a chaser. I don't care what this thing wants to do. I want it to go lower. Might as well go lower. But find structure, and then we'll see if it can come back. Because the one thing about this fall is it's been very inefficient. So if this is coming down here to test lows, we have all of these inefficiencies that can then be found. So there's going to be a liquidity grab maybe at the bottom, and then we can pop back up here and find some efficiencies in the midpoints. So I'd like to buy this thing low around 58.50 or so, but I'm just going to wait for it to kind of find those prices before I settle in. Okay, 314 forecast of Tesla. Let me take a look at something really quickly. for Tesla. Let's find some fair market value on this. So Tesla, I mean, I know it's a storied stock, a little bit high in the price to earnings. Let's see it compared to the peers. This is the one thing that makes me nervous about Tesla. Based on a discounted cash flow model, it's overvalued. Now, I'm not saying that it can't get higher, because ultimately, look, I think ultimately Tesla's probably going to be one of the more profitable companies in the world. And that's because there will never be a single human that works for Elon Musk at some point. It'll be all robo-taxis and all automation and all humanoids. That's the type of, like, this dude is a real life Tony Stark. So if you like that as an investor, that's great. But from the human side of things, that's a cutthroat industry. But I think that's the good thing about Tesla being valuable. It's not just an auto play, but it's an energy play, and it's an innovation play. It's a disruptor play, all these things. But there's only so much. That's why it's been so volatile over the years is, the investors get so caught up in like the sentiment swings and the story of Tesla. But what if the numbers aren't there to back it up? Right? I mean, if Elon Musk goes like just all in with AI and all in with everything, AI, automation, the metaverse, whatever. It just goes all in, and all of a sudden it doesn't pay out. Tesla's going to get crushed if it's doing it through Tesla as opposed to its own company. So right now, just based on simple fundamentals, discounted cash flow model, it is overpriced. So I'd like to see price pull back. This is why when I was trading earlier, I've got ratio spreads in at 130, 115, and I would take shares, but I want to take the shares where I think it's fair market value. Okay. So that's my outlook on Tesla. Euro dollar, everyone's like asking for dollar crosses. Look, have you not been watching the dollar index for the last month? I mean, if you're trying to chase dollar stuff now, I think you missed the move. I mean, the dollar index made the move when we said, watch out for a bear trap. You had weeks to trade the dollar and get long the dollar. So you had weeks to get short the euro dollar. The dollar index is going up. The euro dollar is going down. If you're looking at this trade right now, it's like, I don't want to chase this thing. Why? Because the move's gone. This is a nice equal high at 1200. The thing's down 300 pips. I don't want to chase that. The move's over. So unless you see price making a pullback, unless you see price dropping, pulling back, and then giving another trend line break to sell again, I'm not selling a falling knife. I'm not chasing this to the downside. What I'll look for is if price comes back down, I will look to buy the euro dollar down here. And this is resistance. So this is now resistance. This is now support in the middle. I don't care what it does. I don't chase. It's too confusing. Price goes both ways. So I don't like to sell the middle, right? I don't like to buy the middle. I don't want to see the bulls and the bears fight when I need a directional play in Forex. So I buy low and I sell high, and I don't care what happens in the middle. Let the bull and the bears and the retail traders figure it out and get scraped up. I just want to buy it nice and low and overextended, or sell it nice and high and overextended. Simple enough. All right. Statistically, the markets go down in election year in October. Yeah, I mean, you'd think they would and should. They're not trying to. Here's the SPY right now. I mean, looking at here the last couple of days, we do have this recent all-time high. I'm going to actually move this down. So the SPY all-time high is right there. Is this market going to try to stab it today? Maybe. I still think this market fades it somehow. Maybe the reality is FOMC today. Maybe the reality is CPI, PPI combo Thursday, Friday. If the market, I don't know. I mean, I'm not saying that we can't go higher, but man, it is weird to see that before the election, this market's just like la-di-da-di-da, going higher. Who cares? That would be weird. Because what this market has done is essentially pulled back and bought the dip, pulled back and bought the dip. If you look at the monthly chart on the SPY, for the weekly chart, and did I talk about this yesterday? I'm pretty sure I talked about this yesterday, either in this session or my 3 p.m. session. We have some really notable divergence on the higher time frames with the SPY and the Qs and the Dow. Like weekly time frame, really notable divergence. So I'm not saying that we can't go higher. I'm not calling the top, obviously, because price isn't proving that it's going to turn south yet. But any indication that price can actually have a bearish day that is meaningful, that might be enough to help put in a bit more of a high or a top for right now. But I mean, I'm looking at price today. It is super slow to the upside, but it is still just drifting a little bit higher, just a little bit higher. Not by much. I mean, we're up around $1 on the day. You know, my SPX trade right here, SPX is melted up. It's like 2 points higher than where I left my morning session. So it's not that much to the upside. And technically, we're still in this, well, I guess opening range breakout should have been done around 10:30. But let's see if this thing actually turns. I've got an SPX trade running on this account right here. That is hopefully, yeah, it's back to break even now, which if price falls a little bit for me, then that should be hopefully a winner for about 40 to 50 cents. But let's see some price cooperate. I'm long puts on the SPY, man. Let's go down. Okay. All right, gold will sit here till FOMC. Maybe. I mean, the market might not do a lot of anything until FOMC says something that the market's interested in, or CPI news hits tomorrow and pre-market things get a little wild and crazy. Futures market for the morning, it's been just grinding higher, right? Grinding higher on ES and grinding higher on NQ. Just a little bit, but slightly higher. If I go 5-minute chart, 5-minute chart, just a little higher, right? So we're above the weekly VWAP. And I say that, I mean, one thing I've seen routinely throughout the week is if we get a little overstretched, we tend to pull back to that weekly VWAP. And both of these look like, you know, sitting here near these recent highs, we could be, you know, pulling back towards that weekly VWAP and having a bit of a correction. All right. Okay. So what I'd like to do, I've got a little bit more time. Chandler, will you let me know if Nick's coming on at 11 o'clock? Just send me a Discord message real quick. I do want to take a look at Domino's Pizza. Okay, so DPZ has earnings tomorrow after market. I want to take a look at the stock price itself. So DPZ, we're trading around 413. We've had a pretty quiet week. If I look at the weekly candle, this is a good thing. So it's a $413 stock. I may look at like an inexpensive debit spread, so that way I don't have any risk of assignment. Because I've done it with credit spreads, and that's fine. Like in the money credit spreads, it's very low risk. But if the price goes opposite one way or the other, I can get assigned, and that's a little disruptive for a couple days. So I don't want to worry about that. But a 413 price, the weekly candle is very quiet. The weekly expected move is around $25. My market maker move here is around, see, earnings on the 10th. If I go out to next Friday, the 18th, we've got about a $31.50 move for the market maker side. So let me crunch some numbers on option slam. And I might look at a bull call spread and a bear call spread and see if I can have one winner over the next week or so. So earnings history, 10, 7, 8 and change, 9.5, 8 and change, almost 9, 7, 6 and 6. I'd say 8 is probably a good measurement for the move. So 0.08 times 414, we're looking at about a $33 move. That's like spot on. So $31.50 to $33 would be the expected move. Now, what I'd like to do is, this could be a pretty cost-effective trade. If we're looking at it roughly a $30 move, if I did a $20 move and I do a bull call spread, can I see? So there's two ways to trade this. One is I can sell. We're trading at 4. If I sell the 412 call and I sell the 415, that's slightly in the money, slightly in the money. That gives me $34 of credit. Okay. Now I need to make sure that if I take this trade, price needs to stay quiet. Price shouldn't go beyond $34 a movement. If it does, then I'm going to lose on the trade. So if I cap this, let's say that I went on the call side, let's say I go, that would be $33 higher right there. So I would buy that one. And then 415 down to 85, I would buy that one. So that's a $30 move. That's a $35 move. Okay. So I could take the trade here for about $23.70. My max risk on the trade is $1,100. It doesn't take up a lot of buying power. My max profit would be this, though. If price stays anywhere within current levels, okay, if it stays anywhere within current levels, and doesn't exceed 445 and doesn't exceed maybe brand, so 445 and then 380. 445 would be up here. So 445. Okay, and 380. So a couple ways that I can doctor this trade up. So if price stays inside of this range for the next week, time is on my side. So I think I'm going to take this trade. I'd like to take it for less risk. There's two ways I can trade it. One is I take it as is. If price stays within this area for the next 7 to 8 days, this goes out to next Friday, not this Friday. But if price stays within this area for the next week, then I can collect the full, $23 to $24 credit. And that's a nice win. If I'm wrong on the trade, price has to be going beyond, that's a pretty big move. I mean, if we go, I'm trying to think what a 1 standard deviation move is here. I'm right on the outskirts, right? I mean, if you see this right here, I'm basically saying that if price goes no more than the expected move, then we should be in good shape. I think I'm going to take this trade. I also don't have to take a full loss in this either. I mean, price would have to blow through my levels. I could still have partial credit, maybe take a smaller loss here if I'm dead wrong. But going out to the 18th, I'm going to take this trade filled for like $23.70, maybe $24. Let's see what I can get. If I go here and here, get a little bit more credit. Now there's obviously a dead zone that I'm trying to eliminate. So I'll just get closer to 1 strike in the money, kind of centering this with my sell levels. So 23.70. I don't mind this trade. Let's see here. Okay, let me price this out. So this is one opportunity to just basically sell the premium, collect it. If we stay within this is what's nice too. Let's say we have like a lackluster movement one way or the other. So what I'm trying to avoid is if I get too aggressive on the expiration, like I say, hey, you know what? I don't think Domino's is going to do it by Friday. Well, I could collect a lot of premium up front, but if we have a huge move on Friday, that's going to be a problem, right? So I'm going to try to go out a week and see if I can grab this trade. Now, as I'm watching this, I'm watching the stupid SPY just melt up a little bit freaking higher. Gosh darn it, man. So we are testing some, oh my God, you got to be kidding me, SPY. So the high for the week, we're at a fresh high for the week. We just took out last week's high. We have the previous week around 575. This melt up nonsense. I'm just getting annoyed. It's like, stop going up for a second, would you? But market's going to do what it wants to do. All right, let me go back to this trade. Can I contain price here? It's right outside the expected move. Let me take a look and see how many times Domino's Pizza has had an 8% move over the last 10 earnings. That's the one thing I will price in. Okay, 11:30. All right, good. Okay, so let's go to post earnings. And how many times in an 8-day period has this stock moved at least 8%? That's 1. Not. This one got to 8 and change. So by day 5 and day 8, it got there. So that one counts. That one counts. That one counts. No. And got there. Okay. So as usual, it's like a freaking coin toss. 1, 2, 3, 4, 5. So 5 times it got to at least 8%, and then 5 times it didn't. Well, there you go. Do I love the trade enough to take it? There's 2 ways I can price this out. So that's one opportunity right there. The other one would be, I'm going to take a screenshot of this one. I might take that trade because it's a good amount of credit, and I can turn that into a partial profit. I may not hold it for the $21 max profit, although that'd be great. But I might just hold it for maybe if I can convert that into a $300, $400, $500 winner, I can do that too. The flip side of that would be if I did an in the money bull call spread. Let's go let's say we get a move of about 20 bucks. Well, I buy the 435 and I sell this one. It's only going to cost me 90 cents. Nope. There. It's going to cost me 90 cents to make $1, about $1. This is not bad. If this is accurate, the spread is kind of wide here. But if I paid 50 cents for something that could make me $200, that's a pretty good trade, right? But we need to see price stay outside of that level. So if I move this down 45 cents, that's a big difference, right? Now it costs me about $1.25 to make $1.25. I want to get slightly in the money, so it's way cheaper. So if I could pay 50 cents to make $200, I think that's a good trade. On the flip side of that, that's moving about $17 higher. So let's go down to 400 if I buy the put and then I sell a put. Buy the put, sell the put. So it's going to cost me $1.35 to make $2.50. Now I have to get one of these trades to work, right? So price has to either end up below the puts or end up above the calls, and I can max out $2.50 on a winner. So that's going to be my max winner, and that's going to cost me about $1.50 to take the trade. So if I win one, lose one, I still walk away with $1 profit, and I'm trading both sides of it. Does that make sense? So it's inexpensive, but price is going to have to move. I think I like time and yeah, I like the time. I'm going to go ahead and flip this and take the sell side. So I'm going to sell the 415. Did this just switch on me, by the way? Did prices move up a couple of dollars? I guess a little bit. So if I were to sell the 415 call and then sell the 417 put, and then go out to my expected move. So let's go to $30 to $35 there. And then $30 to $35 here would be in the 80s. So I'm going to go $35 there. So I can get $25 of credit, max profit here. So I'm increasing my risk just a smidge. But I like this trade. All right, I'm going to take this trade right here. So this is going to be, I'm selling the 415 call. I'm selling the 417.50 put. I'm buying the 450 call, and I'm buying the 380 put. So this is almost like an iron butterfly. But I'm just trying to see if price will be contained. So I need 380 on the downside and 450 on the upside. I'm going to up this to 450. Okay, so if price stays inside of this, then I will start to see quick time decay. Implied volatility 87. That's pretty high, which is why I'd rather sell this, because that's a good IV rank to sell. I'm going to try to take the trade here for a couple of bucks. So, all right, 25.15, see if I can get filled. 25.10, 25.05. Come on, give me a decent fill, would you? $25. Filled at 25 bucks. Okay. So, sell the 415 call, sell the 417.50 put. Those are my strikes, correct? Yep. Okay. So selling here and need price to be contained within this. Price to stay less than 450 and greater than 380. And that's the trade. So get a screenshot of that, post this in my Pulver alerts. Okay, so get this one in. And then I see pound yen coming up in the chat, so we can talk about that. Yes. I have a chart I'm going off. I think that's the fresh highs on the freaking SPY. You dadgum SPY. Let's go stock options. So DPZ, 10/18 expiration. I did sell the 415 call, buy the 450 call, sell the 417.50 put, and buy the 380 put. $25 credit. Max profit is $22.50. Expiration, if price is less than 450 and greater than 380. And then max risk is $12.50 if price exceeds 450 on the upside or 380 on the downside. Realistically, I'm happy with a 25% take profit if the $25 credit is trading for $20 debit or lower. I'll consider that profit. I'll be fine with that. Okay, so let me throw in the screenshot. All right, almost done. There we go. Okay, that's DPZ. Delta's the other one that has earnings. Not as volatile, but I'm still watching it. And SPY, ladies and gentlemen, we just eclipsed all-time highs in the SPY. What an a-hole. I mean, I don't know why I'm complaining. It's like I'm up, you know, $3,000 in the day, but okay. I mean, this is the runaway move prior to CPI or not. I mean, hell, maybe we just don't pull back. What am I doing? What am I doing trying to be a bear here? So anyway, I need to watch my SPX position just in case. I think that's going to be down a little bit. Just really quickly checking this. So right now my 310 is trading at 3. Shoot, I need to take a small loss on this one. So I'm going to put this back to a, let's go 6 dot. It's going to close out here 620. All right, I'm going to take a loss on that one. So 57.80 is now trading at a 33 delta. 620. It's been threatened, so I need to put in a 620 debit. Got filled at 615. Well, that was easy. All right, so I took a loss on my SPX trade here. So this one, SPY drifted, or SPX drifted higher. Stop loss hit. Okay. So we'll see what happens. Delta, take a look at this one. I don't really like the area that it's trading in. I'm going to leave this one alone. Part of me hopes that Delta has a miss. If it has a miss and it comes back down, there's able to scoop it up. But if we have positive earnings, we're right back up towards these all-time highs. I'm not going to do much with Delta. This would probably be something that if we're up here at 60 bucks, I'm probably going to short it. Look at a bear call spread or something. All right, somebody asked about pound yen. Yeah, I mean, I was just doing like it was the day trade that I was frustrated with. I mean, I'm still long the overall markets. I mean, my exposure is long. Like that's the tilt, that's the bias that I have. But the day trade that I took was looking for price to stay somewhat calm. Pound yen. So we have this larger swing from our July to August drop. You know, one measure move I would look at here on the pound yen would be if we go high to low and we're going low to high, higher low to higher high, we could have a really nice harmonic pattern. To me, that looks like a potential Gartley pattern. So let me measure this for a moment. This like 61% zone is around 197. Let me measure this really quickly. If I go low to high, plot some symmetry right in there, we're not that far away from it. So if you want to write a number down like 196.90 to 197.50, 196.90 to 197.50, I would be looking for confirmation to then see if we get a rejection there. And all that is just measuring a low to high, higher low to higher high, and then see if it actually turns. So if it's a channel, we just turn in a channel, or maybe this is a Gartley to actually amount to a sell trade. So that's what I see right now in the pound yen. That's it. Okay, and that was profit hit at 240. So 2.40. Okay, just updating a spreadsheet really quickly. All right, does that make sense in the pound yen? All right. So what else do we have? I want to take a look quickly at the Friday earnings. I don't know if there's any individual like financial stock that I want to trade, but I wouldn't mind taking a look at them. So Friday this week, we have JP Morgan, Wells Fargo, BlackRock. I'm just going to look at percentages really quickly. So which one has the biggest percentage move? So JP Morgan, from the percentage move, it's hard to trade these financials because they're usually pretty low beta. So this is averaging about a 4.5% move on a $210 stock. So what's that equate to? Let's say 4%. So it shows an average about 4.4% times a $210 stock. It's about a $9 move on JP Morgan. So we got JPM looking at about a $9 move. We have Wells Fargo, WFC. Wells Fargo trading at 57 with a 4.72. It's going to be obviously a small move as well. So 0.0472 times a $57 stock. It's a 270 move. That's going to be boring. So, would it be good enough to short? Not short, but like collect a premium on it? Sure, if price stays within the expected move. If I go to BlackRock, that's BOK. BlackRock only averages a 2% move. I mean, it's a $1,000 stock, but that's pretty wild. What's this one? That'd be a good one to collect some premium if it stays within the parameters here. BLK. So BLK expected move. We have earnings on the 11th out to the 18th. We're looking at about a $30 move, and I'm calculating an average move. So what's 2% times a 949 stock? All right, so this actually is higher than stated volatility. I'm looking at the earnings print. I mean, we've seen prints go to 3-4%, and that would be right along those lines. Let me see something here. Do I get enough premium if I were to sell BlackRock at 955, sell a call, sell a put? I get $30 for this move. So $30 out of a 949 stock would be 30 divided by 955.04. That'd be a 3% move. So I've got the average earnings report around 1.99%. If I were to space this out go to the expected moves. Let's see if I can go out like 40 bucks. So 955. If I buy that $40 out, 955, and I buy that, that's $40 out. It's a little bit more risk than I want to take. Yeah, I don't like that one. Never mind. It's more of a spectator. Look at this put skew. If you go up 955, you go up $5. This is crazy. You go up $5, you get a 1280 credit. I just even I don't know. It's like the tail end is just so much bigger. I don't know. This is wild, and it's happening in the indexes too. I mean, every day I'm getting way more credit on the put side than I am on the call side. So the premiums are way higher. It's way more expensive to buy puts than it is to buy calls right now. But anyway, all right. So I'm going to stick a pin in the financial stuff. I'll just look through these on my own. But I was considering like a BlackRock or JP Morgan. JP Morgan's not awful. I had a little bit of volatility recently when they had that like 7% drop in a day. But you can see that was quickly contained, right? CCL crossing 1999. They still have some CCL, a little Carnival Cruise Line. There we go. So my CCL stock is up to some fresh highs. Good deal. Let's see how NCLH is doing. That's Norwegian Cruise Lines. Also getting back up to some recent highs. Not bad. And then Royal Caribbean, RCH. What's Royal Caribbean? RCL. Oh, yeah. This thing is ridiculous. Look at this stock. Talk about like disparity in cruise lines. You got Carnival Cruise Lines that have just now reached recent highs from, I mean, I bought this thing during COVID and killed it, and then bought a double bottom, got back to the highs, and had another great trade. But this thing has just been, well, it's a measured move. I mean, you go to a double bottom right here, and then you clone that and go on top of it. There's your double bottom projection right there. And so we got there. And you can see when this market snapped, it's like we were right there when this market actually dropped. So this symmetry stuff is happening all the time in the market. But I did not hold out that long on a Royal Caribbean. So at $190, I'm not that interested in participating. But if I look at some fundamentals here, what is NCLH? Discounted cash flow, overvalued by a ridiculous amount. And CCL. What this is somehow showing, though, if price is supporting this and going higher, it means that people are still spending. I mean, Carnival Cruise Lines, look at this crap. Fair market value with discounted cash flow is $80 for a price of, 18, 19 bucks. So if I'm going to own one that's considered value, it'd be Carnival Cruise Lines. So, but trade at your own risk. RCL, different story. Royal Caribbean, insider selling like crazy, as you can imagine, with it sitting there at these all-time highs. It's been up, hundreds of percent. But that's wild, right? Fair value at $540. There's still room to grow. So I'll do this the same way I did all these other stocks. Give me a dip and a pullback. Because if we come back to find the 50, the 100, the 200, this is in a nice, strong trend. And every time we bounced off of this, look at how lovely the support is, right? So we get a pullback, chance to buy, chance to go higher. So I don't know. It'll be on the list. It'll be one of the other crazy amounts of stocks that I trade, but just one of many. Alrighty. SPX soaring higher. Yeah, I know. We're up to some fresh highs. We just broke the highs. And okay, fine. So FOMC today. Does the market keep ripping? We're still at a fairly quiet move for the week. I mean, from low to high, from this would have been Monday's sell-off into the rest of the week. I mean, it's up 1.56% for the week. We're up to about almost a $9 move on the week. We're still a little bit off. I'm curious this, like, do we hit like a $10, $11 stretch on the week from low to high and then rebalance and finish kind of flat for the week? I mean, I could completely see that happening, that even though it seems like, oh my gosh, today it's going higher. Look, it might melt up today and then FOMC puts it back down, or we melt up today and then CPI puts it back down into the middle, where we have a low, a high, a close, and we're really going nowhere for the week. And what does that actually look like? It looks like the rest of the weeks, right? If I look at this right now, where are we going? Well, for the day, it looks like, oh my gosh, we're breaking all-time highs again, which we are. But if we don't finish there for the week, all this is like long wicks, and I mean, it's trying, right? It is trying for sure. So good effort by the markets. We'll melt up. Seems like we are, and it's fine. I mean, I'm not gonna complain. It's like I'm up 8 grand, so the portfolio is doing fine. So I sit here and I complain about an intraday move that I'm wrong on, but for me to lose, $200 to $300, it's not a big deal when in the grand scheme I'm actually bullish on the overall portfolio, and that's treating me well. So it's just frustrating to have price do a little bit more directional than I wanted, and the week isn't done, so there's still a lot to settle in on. But I managed to stop on SPX. It's fine. So one winner, one loser today on SPX, which puts me, I think for the week, that's what 9 for 10 for the week. And I'll keep trading for Thursday, Friday as well. All right, what else do we have here? My MES trades, I'm still long on MES. I have a 58, 59, 100. These are longs. These are hedges. So this is a micro futures contract. So MES, I have the bearish side and the bullish side. So right now, my 58 and my 59, I mean, looking better. And I think my net position overall, I mean, I've got some good profits running. So right now I'm up about $900. These are decent. These are small losses right now. I actually wouldn't mind just taking the profit. I know we can go a little bit higher, but let's see, NCLH crossing highs. I'm just curious. I mean, nobody knows what this market's going to do, but is this market just super determined just to get to 6,000? Is SPX going to 6,000? Possibly. If we don't get there with any type of interruption during the election, that would be very unlikely. And it's different. I mean, we showed some seasonality this week. Usually October, November coming into the election is a little bit more volatile. But right now I'm looking at these MES positions. I could just close out even my hedges. I can close these out and take about $820 a profit, which might not be a bad play. Then the other one here, those are election hedges that I can leave. Those are inexpensive, but obviously I'm not thrilled to lose on those. So I'm down $155. I mean, maybe I just close the whole thing. I don't know. Stuff for me to think about. Any other charts? I mean, this is what the market looks like today. It has just been a low, drifty melt up. I mean, it's pretty steady. It's very cheesy. Put this on your sandwich. I mean, it's not up a ton, but it's stretched out about $2, and that's from opening bell, and it just seems to be drifting a little bit higher. And that's the direction. So, I mean, I guess it's nice that it's not just gangbusters higher, but it also is, it's like a little weird paper cut where it's like a little higher, a little higher, a little higher, and it's a slow, steady grind. So we'll see. Okay. Fed minutes will be at 2 p.m. today. Take a look at the calendar. So we had Fed minutes today, 2 p.m. Eastern time. And we have some speakers that happened this morning, as also they're lined up this evening. But that's about it. This isn't Powell. This is just meeting minutes. We'll see what their assessment is. I mean, labor market, I'm sure they're going to say like labor market's looking better. Inflation is going to be a sticking point. If I go to that Trueflation reading, CPI comes out tomorrow. I mean, according to this, we bottomed out around 149 and we're up over, I mean, this is a 0.5+% increase off of this low. So I don't know. I don't think the Fed can take a victory lap. It seemed like they did September 18th, and the market's been, choppy ever since. But this is the September 18th FOMC right here. That was where we closed on the day. We gapped higher, and we have stayed there for the last 1, 2, 3, 4 weeks. Now, yes, we're higher today, but this market is barely moving for right now. So we'll see what it does. But when it's an open space, there's clearly an absence of sellers right now, and this market isn't moving much directionally to the downside. Not yet. And right now it's because there's no reason to. So if I take a look at my overall charts, I mean, if I box this in, it's like if price is not showing us any real bearishness, then again, there's no reason to really get bearish. There really isn't. So the trade I took in SPX was a trade that's just like, look, contain price. So I sell above, sell below. I looked at contain price on the day. That didn't work out because it threatened the call side. That's fine. But for the market drifting higher, I mean, everything in my portfolio is tilted to the upside, so that's good. But I still think there's risk. I mean, if we have any type of nasty sell-off, it's like a red candle is going to be a lot bigger than these couple of green candles. But if we're up to some fresh highs again with earnings season upon us, if banks are looking optimistic to lead things off, we might have some surprise upside moves, and things seem stable and corporate profits are good. Inflation might be the sticky background that, the Fed's like, it's fine. We'll run hot until inflation is a problem. What's that number? I don't know. Maybe inflation is, as long as it's not back above 3%, the Fed's like, okay, fine, let's just rip. We both know the government's going to be spending with whoever's in charge for our new president. Fiscal spending is going to be still a very constant thing. Our debts will still be a constant thing. Our deficits will still be a constant thing until they're a problem. But those cans get kicked down the road, we know, years and years and years and years, and maybe forever. So who knows? So congratulations, all-time high in the SPX. Dow, not quite there. Last time we had an all-time high here was in that was September 27th. Nasdaq, not quite to these highs that we saw that stretch out on the 26th. So a little bit of divergence between the indexes. S&P is higher. Nasdaq's trying to creep back up towards those recent highs. The Dow Jones, not quite at the highs from the 27th. The Russell, looking better. Actually, now that we're on this, if I've got a couple more minutes before I have to go, let me see. I might just end up putting in a credit spread. Let me look at something here in the Russell's futures market. So, I mean, I know there's risk here, but if I don't know if I'm going to get filled or put in like pending orders. Let me see if I can get something in around like 205. Let's see, IWM, the 205 by 200 or the one. I'm going to do a 200 by 195. Okay, I'm going to try this on the IWM. This is going to be a pending order. So Russell, let's go out to, I'm going to look at this one towards the end of the year. Let's go December 31st. If we have a snapback, I do have some shares that I'm getting called away around 220, I believe, to 225. So I'm going to look at a December 31st expiration, 200 by 195 or a 200 by 199, and see if I can get filled on this for, let's see what an at the money's trading for right now. I'm going to try to get like 45 to 50 cents on the dollar. So if I did, let's do this account here. So at the money, 219.24. If I did a slightly in the money bull put spread, that's 44 cents. All right, that's good enough to kind of ballpark my trade. So I'm going to go after a 200 by 99 bull put spread for 40 cents credit. I'm going to do this for 10 contracts. So if I'm right and I get filled, I'm going after $400 profit. If I'm wrong, $600 risk. So this can mean IWM 200 sell put by 199, and this will be a pending order. Okay, so pending order there. And everyone's going to get a little piece of this action. There we go. Okay. All right, make sure this is in 1, 2, 3, 4, 5, 6, 7. Yes, and this account as well. Similar. Okay. There. Okay. So add this into the tracker. I'll put this in the A1 Pulver reports section for Discord. So that's an IWM sell 200 put, buy 199, try to get 40 cents credit. That's waiting for price to come back and find a pullback zone. Now, 200 by 199 means that we could come back and test this level. I will also adjust this trade. If we come back into the 50 or the 100 and even the 200, I might adjust this up and get this to be right off the 200 DMA. So I'll leave it as is around 200 by 199. But if we end up going down to the 50 or the 100, I might end up taking a couple more trades. So look, there's a lot of trades that for me, I've got on my watch list. If they come back to my 50 or to 100 or 200, I'll be adding in some credit spreads. So I'm expecting to be pretty active if we have any type of pullback or dip. And as you know, the day is wrapping up, and I'm going to get off here in a moment so Nick can come on. Gold, dollar. Look, it's an interesting market, right? We're sitting here at all-time highs again for the S&P, and the dollar's still bullish. Dollar's still bullish on the day. Gold is still selling off. China is, mitigating some of the gaps to the downside, but October 12th is going to be another round of potential confirmation of more stimulus or consistent stimulus. So I do wonder if there's still some buying interest and flows in the China stocks that I've been trading for a while, and looking to see if there's just this. We had this ballistic move, a nasty pullback, but it stabilizes and pushes back to the highs again. Higher highs are great. Equal highs are good. But I'm still going to be watching the China stuff pretty carefully. Gold, I'm still long on gold. I just want to see it pull back. I want to see a pullback towards 25.50 or lower, and then I'll start reestablishing some gold positions. I mentioned this yesterday with Nick. I do think that if gold is getting into the retail crowd, one thing to watch in your edge finder with the commitment of traders is look at your retail inflows and your retail trader commitment as opposed to your institutional flows. If institutions are flowing out, that's not a good sign for gold, right? So I want to make sure that we're not still like super bullish on gold while retail traders are starting to participate late in this cycle. I think that if we have another pullback here, that gives us an opportunity to still be long on gold with a correction. But I just don't want to see a ton of retail traders come in, because that means that contrarian wise, that gets a little bit toppy because they typically participate at the worst possible spots, right? So, alrighty, let me put in my IWM trade I'll put this under index trades under my alert section. This will be for IWM. I put in the trade for the SPY. That's not looking great right now, unfortunately. And my gamma level just freaking disappeared at 567. So that's not good either. Now we're looking at this level all the way up here, starting to fill up around 580. Fudge, man. I hate chasing this thing. I'm not saying that we can't get there, but here's what I'm going to do. That trade that I'm in this morning, let me check it. I might end up closing it out right now and just mitigating some of the risk. So my SPY trade, 1, 2, 3. So I got in for 475. It's down about $200. Price to fall down by Friday is outside of the expected range. I might as well just save myself the money and get out of the trade for a small loss and not worry about it. So I'm going to go ahead and close that trade out. If you got in with me at 373, you're only down about 80 to 90 cents. So I'm just going to close that trade out, mitigate the risk. I'm going to close mine out. Let me see if I get 290. So this one can modify. I'm going to go 290. And just try to finesse this down to get it filled. So 289 mid. Come on. All right, I got filled at 289. So I'm taking a loss on that one. Here, same thing. I got in for $1.57. It's up and down $60. I'm just going to replace this, get out of this trade. So right now it's trading for about 95 cents. Filled. Okay, no worries there. So I'm out of the SPY trade. That's going to be an update That was quick because I put that in this morning, but it's not cooperating. So instead, I want to flip that, and I want to see if my software is going to allow me to get something good, and maybe CPI just pushes prices higher. Can we gap up in CPI at 580? Hopefully. So let me take a look and see what it's going to cost me to do a Friday expiration. If we get to Friday and I do a 580 call, it's going to cost me a 580 call by Friday is going to cost me $1.38. So it's not super costly. This one's starting to light up a little bit. It's not awesome, but you can see that all of the flows are coming bullish, right? Like this was a huge level this morning that is no longer valid. So I'm getting out of the trade and I'm washing the trade with a small loss. Now, if this is accurate with these flows continuing to the upside, I don't know. I feel like I don't want to chase this stupid thing. So I think I'm just going to let it marinate for the day rather than, okay, I clearly was wrong. I'm taking a small loss down here. It's melted up today. If we get a pullback, I want to make sure these gamma levels to Thursday, Friday are still there. But I'm just going to make a note. If I put in a 580 call for $1.40 or so, that will get another, $4.20 a movement. And I'll calculate that out really quickly. So I don't know if I'm going to take the buy trade. I like these net sizes to be way bigger than just, it's just like a consistent flow. Because having 100, 100, 100, 100, I mean, it could go up through all these levels, or it could resist. It could be all resistance too. I like it when it's like this outlier gamma squeeze level. Is your risk on China trade smaller than usual? Not really. I've got 3% of the portfolio allocated to China plays. It's 11:30. I guess I got to go. I don't need to get pulled off when I've gone an extra, hour and 15. So, all right, buddy. Look for more alerts. I'm gonna get rid of that SPY one. That's gonna be an update for a small loss, and I'm debating whether or not I get in for a small comeback trade at the 580. I might just take one trade at 580 and see if it hits. So, but I'll let you go. And Nick Phillips is on next. All right, thanks everybody. See ya.
Gentlemen, how are we today? I think someone turned off the lights here, but it's whatever. So you're here for a job interview, Mr. Nicula and Vlad.
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh yes, hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Hey guys, good afternoon. Hope you're all having a great, mid of the week. I've got to say these adverts that A1 put together are quite entertaining, so well done to whoever makes those. So today, interesting week. I am currently down about 1% this week, currently sitting in drawdown as well, so I'll show you what positions I'm in. Currently got a oil position here. I already took an oil position today, got stopped out, but I re-entered here on this fib retracement. You know how it goes. Anyone that watches my segments often will know exactly the setup that I look for. It's a fib retracement here. We got the touch between the 0.5 and the 618 level, lined up with a support level through here. So decided to enter, basically just banking on the fact that OPEC have paused their production plans for until December the 1st. And we also still have tensions in the Middle East that could flare up at any moment. So we'll see how this one develops. Although, despite the fact that we've got, or regardless of, if we didn't have the wars in the Middle East, I would actually be very bearish on oil at the moment. So we'll see how this one develops. But so far, so good. New Zealand dollar. So this one is quite a no-brainer trade, actually. So I was really late to the party on this one. So I've got a position here that is just 0.2% risk, just so I could get into this market. And I reserved 0.8% risk to scale into this, hopefully, as we do come higher, and then continue to see this market drop. So what we've had with the New Zealand dollar, obviously we've got the US dollar climbing higher and higher, doing very, very well for itself. As far as I'm concerned, we don't see the market expecting another 50 basis point cut after we saw the NFP non-employment data come out. We are also still awaiting CPI, but I don't think that we're going to see a negative CPI for the dollar, really. So we do have some positive factors for the US dollar to head further up. We've got the Reserve Bank of New Zealand that is cutting rates. So yeah, overall this trade looks very, very good. So again, just a very small risk to get into this market, and then hopefully going to add and scale into this one as it trails upwards for a pullback. Australian dollar Swiss. This one is mainly a anti-retail play. So retail sentiment is increasing to the short side on the Australian dollar Swiss. So I'm counter trading them following this trend line. Got 3 touches, entered on this third. Did suffer very minor drawdown through here, but nothing too major. Basically looking for a correction. So this was sort of the area, if we draw our box here, this was when we had, do you guys remember the risk off move we had when we saw the unwinding of carry trades? And it was kind of a bit of a flash crash, you could say. So I'm looking for almost a correction of this fall move that we saw during that period. The US dollar NOK is quite interesting. So I've been speaking about this one for months. I think actually probably since I started coming onto these segments, I've been talking about the dollar NOK. And I never managed to actually get an entry, but finally I've entered. So this was a good example actually on how I manage my position trades, because I'm looking to hold this one into next year. So you can see my profit level down here is actually, let's see how far this is from current price. So I'm looking for around a 17.5% drop. So, this isn't going to be a quick trade by any means. So what I've done is I've entered twice. So you can see I entered quite impulsively or quite aggressively down here. Once we started showing some rejections at this trend line, we managed to break out slightly. Then on lower time frames, again, we started to see some rejections. So I entered again. But these positions are 0.3% risk each. So I've got a total of 0.6%. So it's not even a full 1% risk here. So the way that I plan to manage this is very simple. Throughout here, so any point that is now sat in drawdown is a no trade zone. So I'm sat here in 0.6% risk, and I've reserved that 0.4% risk I've got left for when we're in profit. So once we start breaking these lows, I can scale in again with another 0.4, trail these stops down, and yeah, very simply, straightforward, really. But of course, you need to have patience in these types of trades, and you do need a large amount of capital because it can very easily blow your accounts. Obviously, if you don't have the type of leverage or the type of capital that can execute these positions. Lastly, we have one on the dollar Mexican peso. Again, currently in drawdown here, but nothing too major. Still in downtrend on the lower time frames. So we'll see how this one develops. But yeah, so far, so good, I guess, really. Not had any red flags here that it's not going to work out yet. So you guys are talking about gold. Roman, it's been a great month. Good for you, Roman. I'm proud of you. Well done. Or happy for you, I should say. You guys are wanting to buy gold. Let's have a look. Yeah, so I have been tempted to buy gold. So you can see I've had it up here. I've been taking some sort of day trades on gold here, but nothing too substantial, just trading these sort of pullbacks that we've been seeing. However, I am starting to see gold in a bit more of a bearish light now. So I think Nick's shown this a few times, but gold is reading bearish for the first time in a while on the edge finder, which of course is one of those signals that we should not really ignore. So yeah, actually almost everything here is bearish for gold. We also have the daily time frame here that is continuing to push down. It's not really showing any slowdown in momentum. I mean, on smaller time frames, again, we are having a little slowdown around here, but overall, I would expect the first real stopping point or entry level to be in this zone here, and that would be the first point where I'm looking to buy. Because don't forget, this isn't just a move really because of the positive US data. It's also possibly quite a lot of profit taking. So what we've had on gold is a huge run to the upside. So let me find the brush. So during this period, we still do have, don't get me wrong, we've got a lot of central bank demand. We've had a lot of sort of reasons to buy gold during this period. And we still do. We've still got the Middle Eastern tensions. We've still got problems in Russia, Ukraine, and we do still have the elections. However, one of the big drivers was rate cuts. Now, if rate cut expectations are starting to decrease, so for example, we were sort of expecting the 50 basis point cut that did happen. Now we've got positive US data. It's likely we're going to see a 25 basis point cut in November. So if you were an investor, why would you not be taking profits around these all-time highs, looking for a lower price on gold to possibly buy again? That's just the way I see it. Again, there's no real way to say it is profit taking, but I think in my eyes, it's pretty obvious that it would be a factor. So yeah, I'm not really interested in trading gold at the moment. But yeah, if I was, again, stops below these lows here, entry on this 0.5 or within this sort of golden zone here, and take profit at the fib extension, so almost around 3,000. Still got a long-term target of 3,000, so we'll see if we can get there sort of by July next year would be good. Thoughts on EuroCAD? Was it EuroCAD? Yeah. Yeah, I'm not really a fan, to be quite honest. The euro, in my book, is very weak. We've got weakening Eurozone data. We've also now had the ECB saying that they're going to cut rates. The data warrants it. And the Canadian dollar could do okay, actually, if we do continue to see the oil prices rise. So I guess in my book, this would really be a short. But technically, there's nowhere to get in. Sorry, I'm just having a look here. Yeah, I guess the only place I'd really be interested in going into EuroCAD is if we did see this break and retest. And again, this will be relying on the weaker Eurozone data and an increase in the oil prices. But other than that, I don't really see much for this position. So let's have a quick look here. So yeah, US dollar continuing its rally to the upside. The yen moving to the downside, that's expected. We've got the pound pretty stagnant, the euro continuing its downturn. Weaker Eurozone data, obviously that's a given. We've got the Bank of Japan not hiking rates. So again, that's a given. We've got the US data that's coming out positive. So yeah, I mean, these markets are relatively obvious, I would say. That's quite ironic to say that I'm in drawdown at the moment, but yeah, that's the way it is. Yeah, okay, cool. So watch list, Australian dollar can go, euro US dollar, still looking for the pullback on here. So I mentioned this before that I would, I've been saying that I'm short or bearish on euro dollar for a while. I think it's probably since around this area that I've been talking about going short. Obviously, I was very early to the party during this period, but the thesis still stands. So I'm really looking to see where can we get an entry into euro dollar, and at the moment there isn't one. So I need to see either a pullback to just this previous low to use this as a break and retest, or a further pullback to the upside for this 0.5 or this 50% retracement, and again, a move to the downside. But, you know, at the moment, it's flat. There is nothing to do here. We are actually just respecting this support level through here. So it would be nice if we can bounce off here. So we'll see. Yeah, we can have a look at pound yen. Let me just see if there's anything else here that's worth talking about. The euro Australian dollar. This was one, again, I was looking to go short on this one, I think last week, but at the moment it's kind of a no trade because we've got weakening commodity prices. The commodities have turned around quite aggressively recently. We also have the Chinese stimulus that's fading. So we've got two sort of weakening points there for the Australian dollar. And again, I'm quite bearish on the euro, so it's not really the ideal trade. Euro pound. This one actually is still quite interesting. Although the Bank of England is still planning to cut rates, it doesn't seem like it will be as aggressive or as prolonged as the ECB. So we've got a slight divergence, if you want to call it that, between the central banks. So I'm really looking to possibly get in. Let's see, actually. Yeah, I don't want to be overly optimistic here, but maybe somewhere around the 0.77. But of course, we'll have to see how these markets develop. How long until FOMC? FOMC is at 7 p.m. my time. Let me just double check that's right. It's the wrong day. Yeah, 7 p.m. So we've got 5, 6, 7, just over 2 hours until FOMC. So we've still got a while. Pound yen. How FOMC affect the Bitcoin market? Well, it depends what's said during FOMC. You know, if FOMC if we have FOMC and it sounds quite hawkish, then we could expect Bitcoin to go down as the dollar strengthens. Whereas if they sound dovish, we could expect Bitcoin to go up as the dollar weakens. So it really depends. So pound yen, similar to I can't remember what I was talking about earlier, but yeah, I think pound yen and almost all the yen pairs actually have a lot of potential to correct this move now. So the reason is because there was a lot of indecision with the yen over when was this? Yeah, sort of since the start of August, we've had a very, very difficult period to trade the yen because we had the rate hike, then we had the word of no more rate hikes, then we had the change of leadership, we had risk off, then we had again more words of no rate hikes. So it was very choppy during this period and it was very difficult to trade. Whereas now it seems to have calmed down, and the last thing notable that we heard was that they're not in an environment to hike their rates, obviously by the Bank of Japan. So if we take that into account, obviously the yen or the Japanese economy is still not in a great place in my book. It's pretty poor, whereas the pound data is okay. And again, they are still looking to hike rates, but again, cut rates, but it's not concerning as far as I'm concerned. So yeah, pound yen, I may look to get into this at some point. Maybe if we could see some sort of rejection around this area, that would be great. And then I could get in a little bit lower, but if not, that's fine. Again, I'll look for some type of entry on pound yen somewhere. So we'll see. Gold, we've already covered gold, but for now, there's nothing to do. I know a lot of people are trying to buy the market where it is. They've seen this pause or this slowdown on the lower timeframes, and they're it's buy gold, buy gold, buy gold. But why would you buy gold right now? Like what is it that's telling you? Is it just because it's had a drop? It doesn't make much sense in my book. So as far as I'm concerned, there's nothing to do on gold until we have come down to this fib level. So a 50% retracement from the previous low, that would present quite a nice pullback as far as I'm concerned. Then that would be where I start getting interested to buy. Before then, not really bothered. Maybe some day trades like I've been taking here, But yeah, I mean, actually, this is something as well. If we look, let's put it on the 4 hours. If we look here, let me hide this so it's a bit more clear. There, we've got a really nice trend line on the H4 that price seems to be following. Again, I speak about these divergences quite a lot, but we came quite far above, and now we're having sort of the correction back to the downside. But even if you're trading this trend line, you would still expect a slightly lower price. So yeah, there's nothing on gold that's interesting to me, really, unfortunately. But yeah, I think if I was looking to trade gold, it would be more for sells rather than buys at the moment. Hi, James. FOMC minutes is not such a big deal. Not really. We can get some signals, but normally it's just a bit of a snooze fest. I think it's not really super relevant. It's not something you would really want to try and trade. So normally what I do with FOMC is I leave. I might watch it if I have really nothing else to do. But if I don't watch it, then I'll come back afterwards or in the morning and I'll review what was said. But yeah, normally it's nothing that I'm too bothered about, to be honest. Obviously, if there's a rate decision, it's different. But obviously we don't have the rate decision today, so it'll be more just yapping. And again, I'm already sort of pricing myself in for a 50 basis point cut rather than 50. So, I've not really had any signals to point me otherwise. 5 p.m. Yeah, well, obviously it depends what time zone you're in, but if you just look on any news calendar and set your time zone, you'll see what time it is. In the UK, it's at 7 p.m. on the daily time frame. JJ, I'm not really sure what you mean, but yes, this is the dollar index on the daily time frame. Yeah, we can get rid of this. Although technically this trade looks really nice. If I was just a technical trader, I'd probably still take this because it does really look good on a technical aspect. But the sad thing is the economics just don't really support that idea anymore. Euro pound, I would really like to get in, but I'm just not super happy with this entry. I think we could probably get a better one. Dollar CAD has had a huge run actually recently, which is nice. Gold, oil. That's Brent oil. Yeah, Brent oil looks quite nice as well. Pound dollar, not too interesting. And euro dollar, yeah, that's about it on the watch list. FOMC, I think we need to sell gold at FOMC. Ryan, why do you think we need to sell gold at FOMC? I will go full margin. Ryan, I hope you're trolling, although I have a strange feeling that you're not, but please prove me otherwise. Yeah, no problem. It's quite late. It's 5 p.m. here, so I'm kind of done for the day, so my energy might be a bit lower, so I apologize about that. Normally I have a lot more to say, but I'll be completely honest, I'm a bit sleepy. Do you believe DXY is going to get stronger after the minutes? I don't know. Doesn't matter what I believe. And that's the thing. I'm not sat here trying to trade FOMC minutes. I have some positions on. If it's good, then it's great. If not, then fine. Again, I'll review it and research it in the morning, and then I'll make decisions from there. But I don't really care what happens for now. If NFP was bullish for the dollar, won't CPI be the same? No, not necessarily. I mean, it's a sign, but it doesn't mean that always. So, for example, ADP, people say that's a signal for NFP, and it slightly is, but it's not always the case. You can have a discrepancy there. Dollar just topped for a long time. Yeah, it's reached. Actually, let me find the date range here. So 55 days. Yeah, it's not. It's at the highest it's been for 55 days or 54 days. Oh, GBPUSD. GBPUSD just topped for a long time. Isn't the pound dollar down? What do you mean it's topped? Gold, sell or buy FOMC. Ryan, relax. It doesn't matter. Don't try and gamble news. There's no point. So actually, this is something I was talking to about someone the other. Talking to someone about the other day, and it's a lose-lose situation. So Ryan, take notes. Let's say you gamble FOMC, you go full margin, and let's say you somehow make, let's say you make 50% on this NFP, or this, FOMC, just for example, obviously. This then gives you such a bad habit. This will be repeated over and over, trying to get that same rush, trying to get that same return every time, until one day you realize, oh shit, oh sorry, don't know if it's family friendly, oh dear, you know, that 50% I made the first time, I've actually just now gone and lost 500% because I keep full margining. Whereas if you don't gamble news and you go slow and steady, you can do much better over the long course. So please don't gamble news. And again, as I said, it's a lose-lose. You either get a really bad habit given to you or reinforced, or you lose your money. USD JPY top. Well, there's no reason for the dollar yen to really start going short. Technically, we are now hitting this 200 daily moving average, which can act as dynamic support, but obviously the economics outweigh that really. And at the moment, the yen is kind of starting to fall off, and the dollar is upticking. So we do have that difference. So if we look, got the dollar on a pretty strong rise to the upside. We've got the yen plummeting to the downside. So yeah, there's no reason really to sell. Australian dollar yen good for buys? I wouldn't. I think if you're wanting to sell the yen, there's better places to do it. So the thing is with the Australian dollar was strong for quite a while as we saw commodity prices rising. So we saw copper, we saw natural gas, we saw gold, we saw silver all rising, and now they have taken a turn. So if we look on gold, again, really nice rise and then a drop to the downside. And then we've also got the Chinese stimulus that was really helping the Australian dollar. That's fading. So we've got two pretty heavy factors for the Australian dollar starting to sort of die down now. I mean, it could still work out. Don't get me wrong. I think there's just higher potential on a different yen pair. Slim Reaper, I think pound yen buys are probably the best idea. If you can sit through some of the noise on pound yen, so you can see it's a little bit choppy at times. So again, let me find this brush here. Quite choppy, quite messy, and again around here. If you can sit through that in a swing trade, then you could get something that's a bit like this, or something along those lines. How much do you risk money in trades? I can show you actually. So this is one of the accounts. So you can see currently in some drawdown, actually had some losses. So this one just had 2 losses here. But yeah, it's about 1 to 2%, depends on the exact trade. So yeah, this one's sat in drawdown at the moment, but it is what it is. So there you go. Hey James, what do you think about oil? I'm in an oil buy position actually at the moment. So you can see that here. This was taken on the H4. So just trading, as I always do, trading off this 50% level, got rejection here. We've also had the moving average cross. So yeah, just essentially following the trend here. Nothing too complex. In-sell NZD USD since this morning. Well, you're in a better position than me because I'm in the sell as well. But I literally entered about an hour ago. If that, maybe even like 30 minutes ago. This position's at 0.2% risk, so it's very, very small. So I'm looking really for this pullback to get into a longer term position, or sorry, a higher risk position. But yeah, the problem is I just wanted to get in because the economics for the New Zealand dollar against the US dollar are pretty bearish. And what I don't want to do is sit here thinking, oh, I might be able to get a better entry, and it just drops without me. So I'm more than happy to take a low risk and just get in. And if we have a pullback, I can scale in there. Trade less but good setups. No need to force mediocre setups because you are emotionally attached. Yes, exactly. In euro dollar sells, good stuff. Yeah, euro dollar has been a really good sell if you've caught those. Yeah, hold on, just give me a second with the oil things. So let me just read the notes here. It's a bit easier for me to remember. Oil is bullish basically just due to the geopolitical risks. China reform didn't provide another stimulus package or even mention it, which is a trigger. Lack of economic support leading to liquidation. Libya production started increasing, so that's bearish factors. We've got OPEC paused the scheduled production increase due to the recent price weakness. On the other hand, Saudi Arabia looking to resume full production on December the 1st. So that's a short-term bearish, long-term bullish. So if they are still planning to increase their production, that's obviously quite bearish. But if they paused it, then that's quite bullish. So we got kind of a mix, but then obviously we mix the Middle East in there. So it's not a super clear trade. It's not something I can sit here and say, oh, this is definitely going to work out. It's a little bit cloudy, but again, with the pretty simple technicals here, happy to take that risk. What's your take on buy stop as points for liquidity getting triggered? Anthony, I don't think liquidity is a part of really what retail traders do, to be quite honest. So it's not something I can give you thoughts on. So if you break down what liquidity is, it's money going in and out of the market. So you need to be very specific on what you determine as liquidity in the market. Every single tick is liquidity. You know, every tick to the downside is profit taking. Every tick to the upside is positions get added on, for example. So, you know, when you say, oh, there's liquidity here, well, there's liquidity right where price is. Got out of dollar Swiss buys about an hour ago. What do you think about a re-entry? Actually doesn't look too bad, to be honest. The weekly time frame looks really bullish. Daily's bullish. H4 is really bullish. I might add this to the watch list and see if there's anything that can justify going in. I'd just be cautious of the level that we've just about to approach or already are in. So what we could see from here is some sort of pullback, something like this, and then sort of continuation to the upside. So that's what I'd be looking for. Or a break. Oops, it's the wrong thing. Or just a clean break, retest, and continuation. But yeah, I think there's, I think this could be a great opportunity, actually. I think on the last stream, I said I'm a little bit on the fence, which I still am, which again is why I'm not in this trade. I need to do some more research before I would really pay too much attention. How is Bitcoin PLC tell? Okay. Yeah, I mean, I'm not a crypto trader, so I can't tell you very much here. I mean, it's stuck in a descending range. For me, there's just nothing there. I'd really be looking for sells just to follow this trend, but that's about it. As I said, I don't trade crypto, so I can give you a very limited outlook there. What's happening with dollar yen? What do you mean what's happening with dollar yen? It's rocked into the upside is what's happening. BTC short-term down, long-term up. Yeah, Roman, I kind of got the same idea, but as I don't trade it, I can't give that much of an outlook or a valuable outlook anyway. The way I see Bitcoin is kind of like an indice these days. It's something I would only really look to buy. I would only short it if there's some sort of very specific reason to short it. I bought dollar Swiss. Okay, let's have a look. Let me remove this. So you bought dollar Swiss here. So I assume you got these lows here. I wouldn't be trailing the stops yet, just because what might happen here is just you could get a double bottom and a continuation, and then you'd be stopped out for no reason. So what I would really want to see is either that, where we get a double bottom here, continue to the upside, then trail your stops once we've tested this level again, or we can continue to the upside, make a new higher low, and continue again to the upside here. Then I would start trailing stops underneath the new lows. So it's very similar to the way Nick would approach this, I think. Or, if you use moving averages, you could just trim the stop to underneath the 200 and the 50 and let them act as dynamic support for you. Euro dollar buy time. Yeah, fair enough if that's what you want to do. What's your opinion on Euro Australian? I spoke on this one earlier, but I can cover it again. So I was looking to go short on this one, but that idea has now changed because, again, we've got the weakening Australian dollar due to falling commodity prices and the fading Chinese stimulus. We've got weak Eurozone data as well. So overall, it's pretty bearish market. Two very bearish assets. So, if you're really looking to trade or trade speculatively, you want to trade a strong currency against a weak currency. And here, really, you've got two weak currencies, in my opinion. Why ask watch a ICT video and how they see is like market seeks liquidity? Yeah, Anthony, the problem with ICT is that he claims to be kidnapped and claims to have traded, created the algorithm when he traded Robin's Cup this year and lost 90% of his account. So please forgive me, but I will take absolutely nothing that he says with any level of seriousness. You could actually statistically flip a coin and perform better than ICT does. Which side gold will probably to move after FOMC? It really depends. Really depends on what FOMC says, or what the what the release is. Hawkish, dovish, who knows? We'll have to can't predict it. Milo, I wouldn't try and start shorting dollar yen, to be honest. What's a good fundamental website to help with determining what two currencies are doing? A1 Edge Finder, code elite for a discount. Yeah, no, seriously though, Edge Finder is great if you can afford it. However, if you can't, a great website is Trading Economics. So this one is, let's say, currencies here. So if you want to go and trade, let's say euro dollar, Trading Economics gives you a very brief breakdown here, and that's about it. You can get some information off things like this, but generally you'd want to use multiple sources rather than just one website. So again, if you've got some money, you could pay for Bloomberg. You can use Twitter, obviously, if you follow the right accounts, Edge Finder, Reuters, Financial Times. There's all sorts of things out there. You're shorting GPAUD. That's risky. That's opposite of what I would want to do. So yeah, I mean, I would really want to go long here again, because we've got, although the Bank of England is cutting rates, I still am pretty optimistic in the short term about the pound. And again, I've said it multiple times, I'm pretty bearish on the Australian dollar. So if you're shorting, you might be able to get some sort of pullback off sort of this level here, which what I assume you're trying to short from, then I would really want to see this 0.5 level get hit, and then I might start going in longs here. Something like this is really how I would look at this market. What is the direction for FOMC? Learn Python. I think you should learn economics as well. No, I'm joking. Well, kind of, but I don't know. I don't have a crystal ball, unfortunately. I wish I did. I'd be a very, very rich man. What's your best setup you would take? Depends. So a great setup would be something like this, where we get a very clear trend to the upside. We get pullback to the 0.5 and a continuation to the upside. That's if I'm swing trading. If I'm day trading, I like to see something like what I've got here. So we've pulled back to the 200 moving average in an overall uptrend with bouncing off pivot points. We've got the RSI oversold, had a bullish engulfing candle, rejections to the downside, took a very simple, almost a one-to-one here. Similar situation again here, and this was a counter trend trade, but this was a correction. So yeah, you know, I have two very simple strategies that do very different things. I want the Edge Finder. I'll definitely be able to get in that one so I can afford it. It's the best I've seen so far. Good stuff. Slim, you can follow me on Twitter. So yeah, I post, you know, here I posted a market update. So I went through the Australian dollar, the CAD, the Swiss, all the way through to, you know, natural gas, and then markets, Middle Eastern tensions and Chinese stimulus measures and things. So yeah, feel free to follow me on Twitter if you want. It's just the same name you see here as FOREX James. US 30. Oh, US 30 is doing really well. I think the indices, the US indices anyway, have had a really nice move. Actually, it looks like all the indices have had a pretty strong rally today. Yeah, I would just be cautious. We are heading into this level of resistance. We've also got the RSI overbought. So just be cautious of some sort of pullback. I would actually quite like to buy this market. Maybe if we can come down and retest this level through here. Oops. Retest something like this. That would be great. Although maybe I've missed the opportunity to go long off this support level. You know, we did hit multiple times, so maybe I'm a bit late to this party, but we'll see. Overall, you know, I only ever buy the indices market, so I'm always looking to buy. Bro's an imposter A1 channel on YouTube restreaming your live video. Well, there's two channels, isn't there? Isn't it the A1 channel and TraderNick channel that both stream the same thing? Or am I being silly? Interesting. So let's see. Actually, gold is holding quite well here. Still not looking to buy, but yeah, I'm just thinking if FOMC comes out really dovish, or even relatively dovish, maybe a buy on gold wouldn't be too bad here. I mean, you know, I'm not going to start trying to buy gold right before the news, but you know, after the news, maybe tomorrow, maybe that wouldn't be a bad idea. What's about pound CAD? I wonder why I've got that. That doesn't make much sense. Interesting. So pound CAD, let's see. I don't really look at this market. I mean, it's very clearly in an uptrend. Weekly time frames moving upside, daily's really bullish. Actually, it doesn't look like a bad opportunity. Let's just see. Yeah, I mean, just on technicals here, wouldn't mind buying this. Let me quickly have a look at something. So this is some research I've put together. So that anyone that watches my segments, you'll know that I have a web page where I list all my economic research. This is what it looks like before it goes on the website. So the Canadian dollar, supported by rising crude oil prices and positive investor flows into Canadian equities, yet challenged by global trade uncertainties and economic slowdown concerns. So it sounds quite neutral, really. So if we're trading the pound, looking for pound strength, really, although it's actually not performing very well. Yeah, I think, to be honest, this might not be a great trade right now. If we can see the trend continue and just wait for the economics to become a little bit more favorable for the pound, there's, yeah, quite a lot of potential here. Notice USD try bearish, contradictory to USD bullish, some insight. Let's have a look. USD try. Yeah. I use this chart all the time for comparisons and things, but I don't think it really matters, to be honest, on what, if something sounds bearish, then great, it's just an opportunity to buy. Who would really try and sell this? I think actually it might even be quite difficult to get into USD try. I think most traditional brokers that are offered to retail traders won't have the dollar try, or if they do, it'll be very expensive to get in, high spreads or high commissions. Fundamentals on the pound. Yeah, okay, let's have a little fundamentals breakdown here. Let's go here to the pound. The British pound's exhibited weakening sentiment as evidenced by negative futures flows. Key drivers of this decline include ongoing geopolitical risks, including tensions in the Middle East and Brexit-related uncertainties. The Bank of England's cautious approach to monetary tightening has further contributed to waning investor confidence in GBP. The market's reducing their expectations for future rate hikes. Brexit uncertainties remain a persistent headwind for GBP as concerns over unresolved trade agreements and regulatory alignments continue to weigh on investor sentiment. The UK's recent economic data has also shown signs of weakness, including a slowdown in the housing market and disappointing retail sales figures. Together, these factors have created a challenging environment for the GBP, and investors largely adopting a wait-and-see approach until more clarity emerges on both economic and political fronts. Inflation data in the coming months will be crucial in shaping the market expectations regarding the BOE's policy trajectory. And breathe. So there you go. That's what I've got for the pound at the moment. So actually, it'd be interesting to see how many of you that listen to me on a regular basis. I've been saying since, I think, the start of the year that I am actually a super bear on the pound over the long term, which means I can be bullish for short periods in that bearish outlook. So maybe this might be the time that I can start executing on that bearish pound idea, which is a bit of a flip on what I've been saying all stream, actually, but there you go. If we don't stay adaptive, we lose. I like CHF pair because it's slow and low risk for small money like us. Yeah, fair enough. Swiss is a good asset to trade. Do you have an idea on where the charts will go in FOMC? No, I don't. It depends on what's said specifically, because it can be neutral, it can be hawkish, it can be dovish, and then it's also a spectrum. It's not just one of three things. It's like a long meter of how dovish, how hawkish, how neutral. So it's best to just wait. I think, let's see, actually. Yeah, I think Nick will be back on for FOMC as far as I'm aware. So if you guys stay, then you'll be able to see what Nick says about it. He always gives great insights. I'll probably be on watching when that happens. Dude's going to say hello and markets will go crazy. Yep. It's always the way. Jerome Powell, market mover. Okay, thanks. So best just to wait after news. Yes, absolutely. Seth, there's no going into news with an expectation is capital suicide. It's never you might be right once in a while, and it will give you some sort of false hope. But then, it gives you that idea that you can be right more often. And then you'll start putting money on it. Then you start losing. And it becomes almost gambling rather than trading. Please, euro pound. Yeah. So I was actually earlier in this stream, I was talking about going short on euro pound, but I'm not super confident about that. I'm still very bearish on the euro. And I think the pound can surpass the euro in terms of strength in the near term. But yeah, in the long term, I'm not sure that this is really the best trade idea. I can't see who you're replying to, but yeah, shorts is sell, long is buy. It's funny, actually, it took me so long to understand what all the trading terms mean. You got bullish, you got bearish, you've got long, you've got short, you've got hawkish, you've got dovish. And essentially, they all just mean up or down. Yeah, it took me a long time to really understand that. So let me just see. Okay, I've got 10 minutes left on this stream. So if there's anything you want to ask me before I go, let me know now. Gold and Nasdaq. So gold is no trade. There is nothing to do on gold at the moment. We are about to head into FOMC, so just keep that in mind. Really, on gold, I'd like to see this 50% pullback. Oops. Yeah, down to around here, then a continuation to the upside. But at the moment, gold is more, I'll just keep buying it. Every time it hits some sort of key support, I'll buy and buy again until there's a clear reason not to buy gold. But yeah, at the moment, the main thing to pay attention to is the US data. So US data is weighing heavily on gold. But we do still have, we've still got the elections, we've still got tensions, geopolitical risks that are still attracting a risk-off inflow. So it's not a case of the US data is good, gold go down. It's more just US data is good, gold slow down. Are hawks, bears, and bullish doves? No, so Raffle, a way to think of hawkish and dovish is, let's do this. So hawks, hawks fly super high or very high. So you can think of a hawk as good, essentially, or bullish, really. And you can think of a dove as being flying lower, so it's more of a bearish outlook. It's a very simple way to look at it. Same as bullish and bearish. Bulls stand high, they've got horns, it's bullish. Bears tend to walk with the head down, so it's bearish. That's just the way I think of it, or the way I did think of it to, understand what they meant. How do we check currency pairs relative strength? Just Google it. Just Google currency strength. You'll get lots of different meters. I've got a small short position targeting the retracement right now. Should I just close it in a small profit or see how it news affects it? As if that's completely up to you. It really depends on if you're willing to take the risk, then sure. I have a feeling it's going to be a little bit more hawkish for the dollar, so more of a bullish effect. But that is a feeling, that's not a fact. But yeah, it completely depends on your risk appetite. If it was me, I would probably keep it open and just trail stops. But if it's small profit, then probably just close. Are we buying gold or selling? King Spicy, whatever you're doing, that's great, but we're not doing anything here. We wait. Now I know how Nick feels. FOMC, we sell. FOMC, we wait, is how it goes. So, again, 8 minutes left on my segment. So any final questions, let me know. Dollar Mexican peso position is stagnant. My oil position, again, is slow. We probably won't see much happen in the markets now. We are approaching FOMC. So markets are patiently waiting. Australian dollar Swiss position, flat. And my dollar NOK shorts are flat. So yeah, actually, I've not gone through why I've taken this trade. Let me pull it up for you. Give me a second. Where is it? Here. So, oops. Here. So we've got US dollar strength. While the USD has been strong, it faces selling pressure due to global de-dollarization trends. Oil prices are NOK. Higher oil prices driven by tensions in the Middle East continue to support the NOK, benefiting from Norway's status as a major oil exporter. NOK buying interest. Fresh buying interest for NOK supported by risk reversal flows and hedge fund positioning indicates market confidence in NOK strength. Norwegian fiscal strength. The government's budget and policies around petroleum taxes and fiscal surplus could strengthen the NOK. Central banks are reducing their USD holdings, contributing to broader USD selling pressure. US economic data impact. Strong US payrolls data may limit Federal Reserve rate cuts, but weaker inflation data could still cause USD weakening. NOK positioning supported by real money investors. NOK strength could continue to build favorable fundamentals. USD overbought. The USD is currently overbought, making it vulnerable to profit taking, especially if inflation disappoints. Key levels to watch, we can ignore that. But there you go. It's more of a potential trade. We'll see how it goes. And that's why I don't have full exposure on this one. It's just 0.6%. So, if it doesn't work out, then that's fine. We just, sit some drawdown and then maybe we get stopped out for a small loss. And if we do continue, I can scale into and round it off at a full 1% later. Even NAS 100 will retest for sell and go up for long buy. Not sure what you really mean by that one, I'll be honest. Silver's bearish along with gold and copper at the moment. So, yeah, you can see actually, this was a silver position we took. Just hit take profit slightly. I think, actually, I don't know, did it? It hit my take profit. Maybe it didn't actually hit the take profit. But yeah, silver and the commodities are very difficult. They are seeing weakening across the board, really, across all of the commodities. So it's very risky to start buying them now. We saw copper heavily influenced by the Chinese stimulus, but again, that seems to have faded now, and we are seeing lower copper prices. So if dovish dollar, you will still keep sell open? Yes, I will. USD JPY. Yeah, we can cover that one last time before I go. So dollar yen, I think for now still has potential to continue to the upside. Sorry, I was reading something. So yeah, still has potential to the upside. The problem is, again, we've got FOMC coming up. So we may see a retracement, which again could provide a buying opportunity here, or we could see a break and a retest to enter. Either way, I'm still bullish on the dollar yen. But yeah, it's just a case of waiting for an entry. I don't want to buy into this resistance really. And we are also approaching this 200 moving average that, again, I don't really want to buy into that because it can act as a dynamic support. A dynamic resistance. So it's a little bit, technically it's not really there for me right now. Excuse me. Can you tell me if the gold trend is up or down? It depends what time frame. If you're talking about the longer term, then gold is definitely still on an uptrend. It's just having a correction. But if you're looking more on sort of the H1 and smaller time frames, then it's bearish. James, you bullish or bearish on gold for today? Well, neither. I'm pretty neutral. I'm bullish on gold overall, but at the moment, there's nothing here. It's a case of just waiting. Yeah, there's nothing to do really, unfortunately. So yeah, I don't think there's really anything else for me to go over. just having a quick think. I've got about 2 minutes left. Sorry, just give me a second. Oh, the Nikkei. Let's have a look at that one, because JPN 225. This one was quite an interesting watch recently. We had obviously the huge drop. It was what is it, almost 30%? Yeah, just under 30% drop on the Nikkei, and it's almost corrected the whole move. Still has some room to go to the upside. Well, sorry, still has some room to correct the move. But yeah, I think we could maybe get some nice positions on here if we can see a pullback. I'd love to see slightly lower, so we could do something like this would be great. Please teach me CPI trading. Wick, CPI trading is not something I would condone. Is there going to be a rate cut? No, not today. There'll be a rate cut next month, more than likely. I just bought Val now, but on micros because I have a bit of fear. Yeah, I'm sorry, I have no idea. I just trade currencies and commodities, really. What do you think about US30? Bullish? Absolutely. BTC, we've already covered Bitcoin, and I can give you basically nothing. It's in a downtrend, so really I'd be looking to go short at the moment. In the long term, obviously looking to buy, but yeah, right now Bitcoin looks a bit ugly. So yeah, US30, all the indices really I'd like to get into, just waiting for a pullback. I got destroyed on Nasdaq here. So you can see I got into a buy position, worked out at the start really, really well, and then suddenly just a huge dump, hit stops, hung around this area, and then continued to the upside. So it really annoyed me, honestly. I really wish I re-entered, but there you go. What can you do? We've looked at US30 a few times. When does FOMC start? It's in an hour and a half at 7 p.m. my time. So, guys, it's my time. I'm done here. So thank you very much for all joining me. I appreciate you. Have a great day. Please don't gamble news. I've seen quite a few messages that are a bit concerning. So just stay safe. There's no need to try and trace those moves. You have got it's Kenzo open next. So guys, have a great day. I will see you later. Good luck.
You know, this edge finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
Hey, okay. Hey, everybody. Hope you can hear me. I think we had some technical difficulties with Kenzo just now. So if he comes back, then that'll be great. But you know, if he can't, then we'll figure it out. Whoops, I made myself disappear for a second. There we go, full screen. So in the meantime, until we can figure out things to replace Kinzo's slot with, unless if he doesn't come back, you're just going to be stuck with me for a moment until we can get some things sorted out. This kind of thing that happens when you're running a live show. I hope you guys are enjoying the show so far. We had a lot of guests lined up. We have more to come. And so I guess for right now, since I'm not so much a trader myself, in fact, you could say I'm not a trader at all. If you watched the A1 trading office competition, you knew that I was out of the game pretty quick. But I hope you guys are enjoying our Halloween promos. It looks like Kinzo's back. I'll bring him in here and we'll say hello to him. Hey, Kinzo.
How are you, man?
I'm just making sure everything's running smooth. I was just stalling until you return. So if everything's looking good, I'll hand it over.
Okay. But on my side, I think it's windy outside and my network might be quite slower, but it's fine.
Okay. Well, we'll see what we can do. If it ends up getting too bad, just let us know and then we'll step in. But it's all yours. So
Okay,
guys,
no
enjoy
problem.
the show.
Thanks. Okay. So good evening, guys. This is Kenzo, Extra Forex. So what we are going to do here is we are just going to do some normal analysis as we usually do. But on the comment section, please let me know which pairs do you want me to actually go through. Another thing is I will just pause my webcam so that my internet can be a little bit quicker or fast because we have like seriously bad weather here. So I can already see US 30 GJ. Okay, we will be checking actually that. So, but as you know, guys, mostly I start with dollar index just to understand where the market might be going. Remember, US is like mostly traded 80%. Or it's mostly on 80% pairs that we mostly trade. So which means if you understand the dollar index, most likely you'll understand the overall move of the market. So as we are on the dollar index, we can easily see that we are coming from a very nice downtrend structure. The market was actually going down, and it seems like that is going to change. But I think the best thing here is going to be if we go on a daily time frame just to see what's really happening here and make sure that we don't really fall for any type of a fake move. So on the comment section here, you can keep them coming. Let me know which pairs do you want me to check. So now on the dollar index, we have a structure like this. So you can easily see that the market previously, it was going up and we had this breakout. So at the moment, we were on a very nice downtrend structure, but the market seems to be reversing again. So are we going to call this an uptrend or something? Not really, because what if maybe the market wants to retest on this previous breakout, where the market actually broke out? The market might reach that level where the market broke out. It might reach this area here, and then the market might start to reverse, or anything might happen here. So for us to say now the dollar is reversing, or maybe the dollar is on a bullish momentum, it has to give us a proper structure that we can easily connect and to say now we are on a bullish structure. But at the moment, yes, we just have this aggressive breakout, but we don't really have a backing structure that we can use to say we are going up or something, because we are still under this resistance. So which means anything can still happen. The market might reverse later on today, or let's say tonight. We have a FOMC meeting. Let's say maybe in less than 2 hours. Tomorrow there is CPI, and on Friday we have PPI. So all those economic news are quite important. So which means anything might happen around here or anywhere here. So we need to be extra careful. But I think I will just wait for CPI. Then from there, it's where I will start to take those decisions. So let's start with our US30. Someone said, Kenzo, check US30. So on US30, you can easily see that, yes, the overall structure here, it's actually an uptrend. But if we try to push it a little bit back there, you can easily see that we had something like this. So which means around this area here, it's actually our resistance. So let me try to draw a proper line there. You will see that we had actually a very proper resistance. So with that type of a resistance structure, there is a possibility that the market might respect at this level like previously. You see the previous structures, what happened there. So there is that chance. But at the moment, things are looking good. It seems like things are in favor of US30. Maybe we will see a breakout. Yes, you can play around there, but just know that we are very closer to this resistance and it's actually quite stronger. The market might still reverse. Yes, there is a chance for the market to break out because the stock market at the moment, it's performing very well, especially when we expect rates cuts. But when we go on 4 hours time frame, you can easily see that the structure was actually very straightforward. We had this consolidation structure. Let me just try to zoom a little bit. We have this proper nice support here. So we had a very proper buy. So we smashed this. So you can see on top here, it was our resistance. So the market was just consolidating this around this level. So the question is, will the market break out here? So we have to wait. If the market breaks out, obviously we think maybe the market will continue going up, or the market might try to actually to reverse. But at the moment, we just need to chill. Let's relax. Already the market is quite higher, so there's nothing we can do at the moment. So another pair, I see GJ. Let me see. I want to go with the line. UJ, GJ, US30. Okay, I think GJ, it was the first one. So on US30, I think we're good. So GJ, let's see what's really happening on GJ. So this is what we have. So let me see if maybe we can use a daily time frame before we go on 4 hours time frame, just to see what's really happening here. So on a bigger time frame, like daily time frame, we can see that the overall structure here, it seems to be still on that nice uptrend structure. But on a bit medium sized, we had this aggressive bullish move. So which means the market was going up. We had a breakout, but I will actually take this one on a daily time frame. And at the moment, we can see that the market was actually touching our support area. So which means I'm expecting to see a continuation of that bullish move. But there is a chance, because you can see that since we had this reversal, and as JPY was quite stronger as they did increase their interest rates, we saw the market reversing. But now we see the market going higher. I still believe that maybe the market is just trying to come back around this breakout here, maybe to try to test this area before going lower again. So, but we have to just wait and see. So I thought maybe the market was going to reverse. You can see that this is an area where the market actually broke out. So I'm expecting to see a proper reversal around this level, even though I did not really mark that level, but I knew that this was our previous breakout. So there is a chance for the market to touch that. But if the market decides to break out of this area, I will continue on that bullish structure, because on a daily time frame, we are on that bullish structure. You see, so it's like we have two structures at the same time, because on a bigger time frame, yes, we are still continuing. But after we broke out here, it was sort of a downtrend aggressively. So at the moment, we just have to wait and see. If the market breaks out of that, so we will continue going up. It means that the market is continuing with our uptrend structure. I hope that makes sense. So I see USD JPY, S&P 500, UJ, okay. Let's see which one is going to be closer. USDJPY, USDJPY is quite similar to that GJ. So you can see that the overall structure here, this is it's just the same as GJ. You can easily see that the market here, it was on a very aggressive uptrend structure. The market was just going higher. So we had this breakout. So at the moment, I'm expecting the market to retest here, maybe to continue going down. But if the market doesn't respect this level, it means the market might try to go even higher. But what we have here is it's a very proper. I like the fact that the market did respect this level previously. You can see that. So let me just make that to be quite visible. So you can see that if maybe we can have a sell pending order around this level, this can be a very nice swing trade. So around this level, it's a potential support where the market found or created an area of rejection. Maybe the market will try to bounce back there and touch this level. Maybe the market will try to touch this level, maybe before we get that breakout, or maybe the market will maybe try to reverse. But at the moment, we just need to wait and see. So, but it's not really surprising because we saw that USD or dollar index, it was actually aggressively trying to reverse. So that's why we see the dollar trying to have that bullish momentum. So once that it's done, let's say maybe tomorrow or maybe later, maybe Powell, he might say something very nice, which is not going to go in favor of the dollar. So which means maybe we might see a very nice reversal. Plus, we are on a resistant area. So that might be a very nice thing because the market might actually give us some very nice moves. So S&P 500, let's check S&P 500. S&P 500, what's happening on S&P? S&P quite similar to what we saw on US 30. Obviously, the market is continuing to go even higher. I think 4 hours time frame here can work very nice. We see that the market is still continuing with the uptrend. So you can see that the market is going higher and higher. We have few touches, obviously, around this level, around here. Then the market here is a little bit far. We saw the market consolidating, and I thought maybe the market was just going to play around this level until FOMC meeting, but it seems like the market is breaking out already. The market is just breaking out before even FOMC. Maybe we're going to have some good news. Maybe the market will end up continuing to go even higher. But be extra careful because this actually is a very stronger resistance, which the market respected for several times. So which means there is a room for fake moves or a fake breakout. The market might reverse aggressively. So wait for the market to mature around this. Maybe you have 2-3 candlesticks before you try to jump in. But if you jump in here, you might have some issues because the market might reverse. We don't really know what Powell is going to say because you saw that the last NFP, it was quite positive. It was like way too positive. I think it was last week. So that might make maybe Fed governors to change their mind about interest rates. You see. So if I still remember nicely, last week NFP numbers were like 254K average hourly earnings, which went a little bit higher, 0.4. Unemployment went lower, so which means things are looking good. But is this going to increase the rates or maybe CPI? If that is going to be the case, we might start to see some slower markets because if maybe we're expecting the Federal Reserve to cut the rates with 50 basis points, they might cut with 25 basis points, which is still good but a bit smaller. You see, because since they started with 50, I'm still expecting to. I'm expecting them to cut with like quite a bigger number. You see. So AUD USD. So let me check AUD USD. I think AUD USD, it was aggressively selling the last time I checked. It was aggressively selling. So let's see. Okay. So I was trying to do my analysis here, very nice, but I think the connections were not making some very nice connections here. So previously we had a proper structure, something like that. So the market was on a very proper downtrend structure and the market broke out. So it seems like the market is back where we can say it was quite around the same level where the market broke out, but this is a little bit lower. So which means maybe the market wants to continue with the previous trend, but we need to have some proper structures. Let's see. Let's draw our supports. After the breakout, we had something like that. That was proper. Let me remove this, something like that. So we had this as our support area. We had that, double lines. Let's see. So after this breakout, so after this uptrend, or let me just remove this. After this uptrend, you can see that the market was going up very nice. So we had this breakout. And after that, the market started to melt. So on this one here, we can say it's a very nice sell or aggressive sell structure, but we can't say we have a solid structure. We can see that this is a free fall. So it's possible that the market can reverse anytime, you see. So what we can do, maybe you can go on a smaller time frame, try to mark areas which make sense. You see, those areas actually, they actually make sense. But if you try to draw a diagonal a resistance like that, it's going to be like seriously steep and the market won't keep up with that type of a trend, which means at the end of the day, we might see an aggressive reversal. So if I draw with proper structures, we can say we had something like this. Let's try. Sorry. Okay. I will try to go on a smaller time frame. Maybe it will be quite visible. Let's try 1 hour. Yeah, if we try with 1 hour, you can see that the market was just creating this aggressive sell, but it was also creating some nice reversals. You can see around these levels, even here, but the moves were quite smaller. This shows us the aggressiveness of the dollar because it was quite stronger. So yeah, with this, I'm not really confident taking anything because it shows us that we are on that aggressive downtrend. If you trade AUD USD, maybe you can see once the market breaks out here, you can jump on that sell, or maybe the market might try to retest that, then you can sell. But on my side, I think I need a proper reversal before I can say I can jump on that sell, because with this type of a structure, the market can just reverse anytime. GBP USD. Yeah, let's check GBP USD. What's really happening on GBP USD? GBP USD. So on GBP USD, guys, I think let's go on a daily just to understand the market structure. I think the bigger time frames, they will actually help you with the overall trend before you go on a smaller time frame. Sometimes you don't even have to go on a quite smaller time frame, because you can see what you want to see here. So on GBP USD, I think you can easily see that the market shows us that, you know what, we are on a very nice uptrend structure. The market has been respecting these levels for quite some time. Now it seems like we're going to have something like that. I think the market will be continuing to go higher. And what I like at the moment is we have this area which the market created a resistance. We had a breakout there, nothing there. So now the market respects this. It seems like the market will also respect this area. And at the end of the day, once we check that, you can see that it's a support or you can call it a resistance or whatever, but it's a zone where the market actually respects. So to me, I think this might be a very nice swing trade from this level going further. But I think the best thing that you can do is to try to understand fundamentals that we're going to have later today, tomorrow, and also on Friday, if they are in favor of a British pound. If not, it means maybe the market might melt up to this point before we have that reversal, or maybe the market might just break out. Then we might see a continuation of that sell. But at the moment, I believe that, you know what, we are on a very nice, very, very, very nice structure that we can get a proper bullish move. I think the market gave us a proper sell, then I think the market might reverse. So Anthony Smith, how are you, man? I hope you're doing great. NZD USD. Yeah, I will check that. Let's just check that and see if we have something. I hope my connection is very good, guys. The weather on my side is not really good. Whoa, this thing is selling. Okay. What's really happening? Obviously, we can easily see that the structure is quite aggressive. The dollar is way, way too strong around this level, but I think we can't see much. We need to go on a bit smaller time frame just to understand what's really happening. Oh, I think we have something there. So yeah, let's see. We have something here as a down, let's see, something like that. So the overall structure, you can see that we are coming from this nice bullish move. The market was going up, very nice uptrend, by the way, but we had this breakout. After that breakout, the market obviously also on New Zealand dollar here, you can see that we don't really have proper structures, which means the market doesn't really give us proper reversals that we can use to draw our structures. So which means this is just free fall, or we can say the market is just melting as the dollar is quite stronger, you see. So which means be extra careful because anything can happen, especially with markets like that. The market might reverse 2 candlesticks, the market might be backy, especially when we have higher economic news. But besides that, we can see that, okay, the market did reverse. Sorry, the market did break out of our uptrend. That's good, obviously, which means now we just expect to see the market going down, or we are on a bearish momentum. So we expect the market to continue going down. But with this type of a move, sometimes you can still lose, even though you know where the market is going, because the market might reverse aggressively. When you think the market is reversing, then the market starts to go down again. And at the end of the day, you might still lose, but the trend still continues because of structures like this, you see. But anyways, I hope you understand what's really happening. I think I did not really check Nasdaq, guys. I did not really check Nasdaq, and you know, I actually like a Nasdaq. So yeah, let's check Nasdaq before we go on other pairs. GJ, I think we did check GJ. Oh, and also gold. I don't know if we did check gold. So this is what we have on Nasdaq. We are now on this nice uptrend. Very, 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 very not really that aggressive on that nice like other ones, but you can see that the market is still going higher. We had some reversals, but if you check this block here, the market was just consolidating. The market was just consolidating around this level. So which means we're just waiting for a proper breakout until we see the market start to move very nice. But at the end of the day, the best area for us to buy is when the market is on the support area. So I'm still very bullish. We had this proper resistance. I can't say it's quite stronger, but for us here, we were just scalping. I think this area might be something also. But at the end of the day, I still believe that the market might just move like that. I hope that makes sense. So let's go straight to gold. I don't know. I think I did not really go on gold, but we did cover USD. So this is gold. On gold, we have a structure like this. So the overall structure is still that nice uptrend structure. The market is still trying to push higher. And remember, with gold, there is tensions in the Middle East, so it's not really predictable. So whatever that is going to happen here, don't check too much don't check dollar to make your decisions that much, because there's tensions, which means things might still be positive for the dollar and the market might not really continue going down. You see, dollar has been quite stronger for a few weeks, or let's say for these 2 weeks. But when we check, we just only had this reversal yesterday on gold. So which means gold did not really care about whatever that was happening on the dollar side, right? Because we have tensions, and when we have tensions like that or geopolitics, gold tends to become very attractive, or you can just call that a safe haven asset. So you see, so at the moment we can easily see that yes, this is good. Maybe the market wants to maybe make another U-turn here, then we can see the market continuing to go higher. I think we might have that, but anything can still happen. We still have some fundamentals, but I think the main focus for gold at the moment is going to be geopolitics. If things are cooling off, it means we will see the market selling. If things are boiling or heating up, we might see things going higher. But sometimes the market might take time to take effect on the stuff that are happening on the world, you see, so, or on that side of geopolitics stuff. So Euro USD, AUD USD. So let's check Euro USD before my time is up, guys. Before my time is at Euro USD. What's happening? What's happening on Euro USD? If you can go on Euro USD, let's see what's really happening here. Okay. Still loading. Okay, so I think on Euro USD, let me try daily time frame. These candlesticks, I don't know if you can see them nicely on your side. So we had something like this. So we had a quick or a very nice downtrend, and we had a breakout. So the market went up, then the market came back exactly where the market broke out. So from this area, I was expecting to see the market reversing. It seems like the market is not really doing that, but I will have to wait and see until FOMC meeting, or maybe a CPI news tomorrow. So at the moment, I believe that maybe the market might actually try and find that support here. Let me remove this. I don't think it looks nice. Yeah, so this is what we have. The market broke out. So I think this was our previous area around this level, or this area, one of that, or we can use a very thicker area because the market created some structures. You can see that we also have something here. So it's up to the market to create something. But here, I was expecting to see the market continuing, going higher. Plus, if I wanted to mark these areas, they were actually making sense. But it seems like the market is not really listening to that, or it's not respecting that. So we'll just have to wait and see. But since we have the news, anything might still happen. So anyways, yeah, I think my time is up. So I hope everything is good.
Hey Kenzo, thanks for coming on, and I know we can't see you today, but we could see your charts and they look clean as ever. So thanks for coming on. I do want to mention to everybody who's watching with us live, if you guys would like to stay up to date with Kenzo, he's got great analysis, both technical and fundamental, on his YouTube channel, which we've dropped here in the chat for you guys. If you'd like to go subscribe to his channel, Extra Hot Forex on YouTube, please do so. It does act to support the guest, as well as, of course, our live stream here, which we're trying to continuously improve by bringing on great talent. So Kenzo, thank you very much for coming on, man. Okay, and I think we're going to continue on here. We've got plenty to look at here as we count down the minutes, I guess, to the meeting minutes, pun intended. So as we jump in here, a couple things to consider. Stock market has made a push higher here today. You've got the S&P 500 and Nasdaq up about 0.5%. Dow Jones actually leading the charge with a 0.8% gain. Russell's up 0.5%. Dollar index is up 0.4%. The dollar is making a push here today. It's looking like it's trying to actually break out of resistance, which is a pretty big deal. You've got, so dollars higher. The VIX is lower today. And we've got about an hour to go before the meeting minutes actually comes out. So we're going to go through some stuff. And we're going to go broad with it today because, again, I've been on stream and video pretty much all day. And to be completely honest, I'm a little exhausted. But we're going to make it happen. And if we take a look at the heat map for the day, just on the stock market side, S&P, Nasdaq, they're up. Technology's up a lot. So you've got tech making a good green move here today. Everything except NVIDIA, which is the exception, because usually it's the other way around. Everything is, flat, and NVIDIA is up a bunch. But NVIDIA is modestly lower on the day, but other big companies are carrying the weight. You've got Microsoft, Apple, Broadcom. Then you take a look at some of the not as exciting stuff. You got Google, Meta. But most stuff here today, guys, in the green for stock traders. If you're an index trader, if you trade Nasdaq, S&P, it's a good day for stocks, that's for sure. And personally, I am long the Nasdaq currently. I've got a QQQ position, which is looking pretty good so far. Coming up to a level of resistance on the Nasdaq, you can see right around here. And with CPI tomorrow, the question is, can we actually take out the highs? So if CPI comes in tomorrow and it is not threatening, meaning inflation is cooling down, we're expecting 2.3% tomorrow, by the way, on a year-over-year basis, which is pretty dang good. Some of you guys have probably been watching the channel since inflation was at 9%, right? It has really come down. We have seen tremendous progress on inflation in the last year or so, which has been really good. So inflation's coming down. You've got companies still putting out great earnings. And as long as those two things continue to be the case, I wouldn't be surprised if you get just more continuation. Trying to, the stock market right now has like an inverse gravity effect. It's like trending up consistently and is continuing higher and higher. I see people are asking about gold. We will, of course, take a look at gold. Whoops. Did not mean to do that. Hold on. What did I even do? Oh, there it is. Okay. Yeah, we'll look at gold in just a second. 30-minute chart here on the Nasdaq. Again, just a really nice day. Big push. Taking out highs. Following through here today. I wouldn't be surprised if this thing just closes really, really green. And then CPI tomorrow, we'll see what happens with it. But there's a couple sectors I want to go into today. So I have a long position on the real estate ETF. That's not doing very well today. I've got a flat position down $39 on this one. But let's take a look at which sectors are doing the best within the stock market today. Regional banks are up 1.4%. Software is up 1.10. Technology up 0.8. Financials up 0.8. Consumer discretionary up 0.75. Industrials up 0.7. Healthcare 0.6. Basic materials, staples up 0.5%. Semiconductors, which I do have a pretty good size position in. Semiconductors are trending nicely to the upside. You get this kind of breakout of this bearish triangle, whatever pattern, lower highs. We got a nice push here. Would love to see this thing take out those highs and just kind of continue on with the dominant trend. So I like semis on the long side. I've been long semiconductors for a good chunk of this year. It's been one of my better trades this year. Actually, some of my best trades this year have been trading this ETF, SMH. I also have a position on NVIDIA, which I mentioned is sort of flat today. So really interesting. Look at this. We got all the gold traders are in the room today. I get it. I get it. Gold traders. What about gold? Don't worry, guys. I like to trade gold too. We will get to gold. I trade a lot of different things. So on my streams, you get a pretty good rotation. So the dollar index is up. That's going to be bearish for the dollar for gold right now. Take a look at gold. Taking out the highs. I'm sorry, not taking out the highs. Taking out the lows potentially would be a pretty bearish signal. So if you're looking at gold, looking at like a 1 hour chart, for example, we had the big slide yesterday, entered into sideways consolidation. And my system, I'm not making this up. You can actually go watch 2 days ago, my YouTube video. The Edge Finder printed a bearish reading like right before gold tanked. It was awesome. So gold bearishness still is where I lean for now. It's pretty straightforward as to why within the Edge Finder. The concept is this. Let's go take a look at metals. If we're going to break down gold, we're going to do it the right way. We're going to talk fundamentals. Gold. -5 score for gold and silver. It's largely because U.S. economic data has been really good. In fact, we've got a table for this. If you are a gold trader and you want to understand fundamentals, this is the page to go to. So if you're an Edge Finder user, you trade gold, you're looking to incorporate fundamental analysis, here is the page for you. Go to your Edge Finder, go to data scanners, go to gold and silver. This is your heat map for fundamental analysis simplified. Okay, so we're getting a -5 score. Look at all the red here. What is the red signal? It signals that when we look at the fundamental data points that are coming out for the US economy, red indicates that that is leaning bearish for gold. So let's break this down. Jobs data is the easiest one to understand. NFP, we saw a lot of jobs added relative to expectations. Okay. So expectations were 140,000 jobs to be added in the United States. We got 254,000 jobs added. So keep this really simple. Economic data coming in strong for the US is usually bearish for gold because it means a stronger dollar and it means more confidence in the economy. Gold thrives on fear. So right now, you're getting a bunch of confidence signals from the US dollar and the US economy. It's why the US dollar is, breaking out higher, and that is putting bearish pressure on gold. So if you're trading without fundamentals and you don't understand this stuff, the point is you might be missing something really key. Gold trades heavily on fundamental analysis. Price action is secondary to fundamental analysis because what changes the trend, what propels the trend, it's always economic data coming out. And if you know how to use economic data, you can turn it into a weapon, not something you're terrified of, right? New traders, scalpers, they're like, oh my gosh, red folder news. But if you actually figure out how to use red folder news and understand what that means, rather than just say red folder news like a parrot, if you actually understand what the data means, it's really powerful stuff. So we're looking at this, we're saying, okay, look, a lot of economic data is coming in strong for the US. That's going to be a bearish catalyst for gold. And that reading, I'm not even kidding, it came out like right over here, right before the big drop. Jobs data came in real solid. Edge Finder got bearish on gold. Gold's dropping. I think it continues for now. I'm not saying like, oh, I'm going to short it right now. You still have to wait for pullbacks and opportunities. That's something I'm doing myself. I'm looking for pullbacks on this. Where can I learn this? If you want a copy of the Edge Finder, we're doing something fun today. During the stream, we are doing a 25% off offer for people who are watching who want to get copies of the Edge Finder or access to our signals room. We were on fire in the signals room this year. We were on fire recently. We just had a win streak like crazy. I will show you I'm not BSing you. I'm not just saying that to sell you a signal service. I show you guys live accounts every day on the stream. Currently today, up $3,900, open P&Ls about 27K. So I'm not showing you that. I'm showing that so that you're not wasting your time watching and learning from some guy on YouTube. I log into my live account every day for this purpose. So you know you're not wasting your time watching some random person on YouTube. If you're interested in getting serious about your trading, come join our VIP room, or if you want copies of our software to help bring fundamental analysis into your trading, which is what I use to place the trades that I place. It's like 80% of my analysis is fundamentals, and that last 10% is, you know, the risk management model, and then, or maybe 15%, and then like 5% is technicals. Technical analysis, in my opinion, is made way too complicated on YouTube and social media. Fundamental analysis is way more powerful, in my opinion. I know people will disagree with me. I don't care. I show you live accounts. I'm not BSing you. Fundamental analysis matters. So anyways, if you're interested in getting access to the Edge Finder, the link is being dropped in the chat. You can send us a direct message and get 25% off while the stream is happening on our tools or our VIP access to get access to the signals. Okay, so in terms of gold from a price action standpoint, so I mentioned I'm not hating on technicals because I use them myself, but this is legitimately how simple my technical analysis is. We had a big level of support that broke. If it retests there, I probably look to sell as long as the Edge Finder still has a bearish reading and fundamentals look good, with a stop loss above here, looking for trends to the downside and going to trail stops and watch the fundamentals. So I'm not selling right now. No, I'm not chasing the move. If we get a pullback, I'll look for a setup. If you're more of a day trader, maybe you're looking for like something like this. Maybe you're looking for the faster move. But for me as a swing trader, I'd like to stick to the 4-hour chart. I'd like to see a bounce. And then, you know, I was looking at this bounce as a possible sell, but did not quite get in there. I was looking at this area here. Curious to hear your thoughts on oil. I am long oil. I shared a signal earlier. I'm long USO, which is oil. So it's a small position, but we're up $279. Again, if you want to see the trades that I'm taking, no cap, no nonsense, no fake stuff, real accounts only, our signal service is currently 25% off. If you are serious and you want to see the trades we're taking, join the VIP. I don't know how else to say it. I know people don't like when you sell a service like this, but honestly, you know, at the end of the day, most people who are selling some sort of signal service, they don't back it up with anything. And I point that out because I want you to know that if you join our service, there's proven results from what we do and what we discuss in the markets. We're not saying we're going to guarantee you any money. We're not here to tell you you're going to go get rich quick joining our signals. But what you can understand is that we have performance to back what we do and what we talk about. Which membership does it matter? The best one is the one, you know, the easiest way would just be to chat with someone on our team, because they'll recommend which one might fit your budget, which one might fit your time horizons, whatever. So just chat with us and we'll give you info there. We've got real people in my team that can help you out. Can you please say anything about FOMC? Yes, FOMC is coming out in 45 minutes. And during that, we are not going to get a press conference. Many people will think Jerome Powell is going to come on. It's not a live stream of Jerome Powell. He's not speaking today. It is the meeting minutes, which is basically a document that gets released, and it's just notes from a meeting behind closed doors that the Fed does, the Fed and then the committee. So will it impact the markets? Maybe. Maybe it will. Maybe it won't. We'll see. But FOMC basically is just notes from a meeting, and it can be very, very impactful, or it can be not at all. So we'll see. That being said, I don't really think it changes too much of my current analysis, unless the Fed says something absolutely crazy, which I don't think they would do in a meeting minutes. They would do it in a meeting, like we're a press conference where Jerome Powell's speaking, but he's not speaking today. Nasdaq up 0.64, S&P up 0.6. Yeah, so I went long oil this morning. It's pretty close to the lows. Hold on. This is a good current example of a trade. If you're thinking about the Discord, this is just a good example. So I'll read out what I said within the group this morning. So oil's pulling back on Chinese stock market sell-off, but in an environment where I think the global economy still looks decently strong. US economic data has been especially upbeat recently, which could continue to boost demand for oil. OPEC does typically want oil to trade around $80 to $90 a barrel to maximize profit, so they could at any time play some politics here to keep prices supported. I should also add, I didn't mention it, but it's kind of an obvious one to mention too, is you have everything going on in the Middle East, which could continue to keep oil prices, relatively supported. Support is being retested after the recent bullish breakout from the daily downtrend we've seen the last few months. There's the screenshot I shared. Stop below support, relatively tight, and it's a small risk on this trade. So that's a good example of what a signal looks like in the group. So when we look at the daily chart, my thought here is that, okay, we've had a nice move off of this daily downtrend. Nice little breakout here recently. This is either a pullback and should respond pretty quickly to the upside, or it's a full-blown reversal, Chinese stocks sell off hard, and in that case, I take a small loss on oil. But I do like the risk to reward here. I think that we do have also, if we go, let's add commodities to the scanning system here. US oil, bullish. And that, again, I mentioned the strong upbeat economic data out of the US. This is what I'm talking about, is all of these things signaling strength for the US economy, which is, of course, bullish for oil and copper, by the way. So we'll see. That's one trade that I'm in. Oil long. I was looking at the euro, but it's looking like I'm not going to get a pullback on this one. The last few days, I was looking for this to maybe squeeze up into this area, but sellers pushing it lower. What is your strategy? Simple support and resistance, trailing stops, and direction comes from fundamental analysis, which is the edge finder. Quick look at Bitcoin. Bitcoin's been stuck in this weekly sort of choppy downward trend. I'd love to see Bitcoin do one of these guys, start to break and maybe make another push. And if you're wondering what would bring that scenario about, cooling inflation, rates coming down from the Fed, corporate earnings looking good, labor data looking good. Basically, think about Goldilocks, like the perfect scenario for financial markets and economic prosperity. And that's when Bitcoin typically does really well. So like in 2022, we were in a really rough spot. Inflation was skyrocketing. Fed was hiking rates. People thought the economy was going to fall apart. So Bitcoin crashed. But if you go back to like 2021, we were coming out of the pandemic was going on, but the Fed was printing tons of money. Companies were seeing record profits. Inflation was still under control at that time. And so Bitcoin flew. Bitcoin is not, I like Bitcoin, but I'd be foolish to think that Bitcoin operates like it's just some holy grail all on its own asset. No, it's just a risk asset. It's basically like a very high risk stock. In my opinion, people will, have their own takes, but that's my take. I think you want to be long Bitcoin, in my view, when things look very, very good for, the general prosperity of people and consumers. Dow Jones is up 1% here. This is a really nice push, and that's actually going to be an all-time closing high, by the way. You did get an all-time high spike up here, but in terms of a closing high, I think we're going to get an all-time closing high on the S&P 500, Dow Jones, and the Nasdaq still has a way to go from its all-time highs. All-time highs are up here. Russell 2000 index also has a long ways to go. The Nikkei looking pretty strong here as well. VIX is down. And I sold a lot of puts. I've been having a really, really good trading month so far. Let's see. Positions. Yeah, so these are the options trades that I have currently. A lot of options trades that I did. I sold a lot of puts on a lot of different things. JP Morgan, Apple, PayPal, Amazon, Uber. And there's my Bitcoin trade. Sold puts on BITO, which is a Bitcoin ETF. Tesla's also looking pretty good. Actually, let's look at Tesla. What's Tesla doing today? Tesla, I own shares and sold covered calls, which has been kind of a decent strategy here recently. Tesla stock continues to push higher. I do think, Tesla, similar to Bitcoin, Tesla is it's going to do really well when things are like, A-okay in the world. That's when Tesla's going to do really good because it's like an innovation company, AI, self-driving stuff. Car manufacturers just generally do well during that time. I guarantee I'm the best trader on YouTube. I'll start live streams in the near future. Follow me and watch the progress. I think that, I'd love it if anybody who, was in the trading space, I would love it if it was mandatory for them to trade live or show a track record of some sort. I feel like that would be such a cool thing. Like maybe someone will invent a service like that, like a streaming platform where only verified, traders could go on. That'd be awesome. My goodness, guys, the gold traders here today are absolutely out of control. I don't know. I do and I don't understand the obsession with gold in general. I get the obsession with gold from one hand because for thousands of years, human beings have obsessed about gold. People have gone to war for gold. They've done everything for gold, right? It's this precious metal that everyone adores. But if you actually just view it from like another symbol in the charts, gold is actually pretty boring, right? If you're talking about things that move big, you want to talk about something that moves big, you could go look at the Russell, the Nasdaq. You could look at Chinese stocks. These things move a lot. Individual stocks move a lot. Gold moves very little on a percentage basis. It's just that a lot of traders are, they're leveraged to the max using CFD brokers with gold. So it's understandable that people are fixating on a tiny move, but gold is only down 0.5%. Whereas, big things are moving 2% on the day, etc. Yields are higher. That's why gold is lower. Yields are higher because economic data in the US is looking strong. I've gone over this 6 times today, so bear with me if I go really quick. Gold is moving lower because yields and the dollar are moving higher. US economic data looks good. We map this out using fundamental analysis on the Edge Finder. Economic data, GDP, manufacturing PMIs, services PMIs, retail sales, inflation, employment change, unemployment, and interest rates. These things are not just fancy sounding words. They have real world impacts on everything that we know and love, including gold. So services PMI coming in stronger than expected, retail sales better than expected, labor data last week smashed expectations. These things are bearish pressures on gold because, again, they offer some level of security in the financial system. People are like, well, look, U.S. economy is chugging along, looks pretty decent. Fed's cutting rates, but maybe going to do so at a slower pace with all this, strength. And that makes gold less attractive. When is gold attractive? When the world's falling apart and people are scared, that's when gold's attractive. When the Fed is cutting rates quickly to try and survive a recession, that is bullish for gold, because people start being like, well, I don't want to be in stocks. I don't want to be in, the dollar. I want to be in something real, something tangible. I'll go into gold. But don't make the mistake of getting overly bullish on gold when it's not the right time. How do you know if it's the right time or not? Fundamental analysis. How do you know? And even technicals. You can incorporate just a level of technicals and say, look, and you're listening to somebody right now who I have been like a perma bull on gold for the last few years, like annoyingly so, and sometimes wrong about it. But my point is, know when to let a bull trend take a break. When you have really solid NFP numbers and you see price breaking to the downside, don't marry the idea of only ever being a gold bull. Like just chill out. We could very well see this thing correct down to 25.60 and it's still be in a bullish trend, right? So if you're a bull, stay patient. And if you're a bear, continue to watch for the signals. What are the signals? Fundamental analysis will tell you jobs data, tomorrow's CPI report. As long as we keep seeing the right figures coming in, we stay bearish on gold, so on and so forth. Now, of course, we don't just watch metals. We have everything on the Edge Finder. What we can do is filter out the neutral readings. So these are our current bullish and bearish signals on the Edge Finder. If you don't have a copy, we're currently doing 25% off during the duration of this stream. So this is ending soon. If you guys want 25% off the Edge Finder, here's how you can get it. Click the link in the chat right now. Send us a direct message. Someone from our support team will hook you up with a stream discount. Just message them and let them know that you're watching the stream right now, and they'll give you a discounted copy, 25% off. It's a one-time fee to get access to the Edge Finder. And while we transition here, we're going to take a quick break to thank our sponsors. We're bringing him back for a second time today. We got Chris Pulver, who also offers a signal service, which you can currently get 25% off as well. If you'd like access to Chris Pulver signals, my signals, etc., or the Edge Finder, everything's 25% off today. So if you'd like to take advantage of that offer, click the link in the chat, take advantage of the live stream offer, and we'll be right back with Chris Pulver in just a second after this quick break.
This Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
All right, I just burst into flames. There it is on stream. Hey, Chris, what's going on, man?
You survived. You guys are killing it. Who is that scream bite, by the way? Is that a stock one or somebody in the office?
I think it's a stock one. I think James found it and threw it over me because my scream would have been far more female sounding. So, anyways, Chris, we got S&P 500, Nasdaq, Dow all up again today.
Yep.
Seems like it can't be beat. Just continuing to grind higher on these things. What are your thoughts on this? And I'm just going to give you a fair warning. We could talk about indices for about all of 7 seconds before everybody wants us to go back to gold. So
I see that.
Keep
That's
it
okay.
7 seconds or less. Go ahead.
Yeah. Look, the melt up continues. The S&P, I think, notched its 44th all-time high of the year. I think this is one of the best years we've seen in an election year with the index as far as all-time highs and performance thus far. It is definitely bucking some of the seasonality trends. I mean, usually we have a slowdown in August, September. We had obviously that like middle of July, August 5th bottom. But from that point, I mean, this market doesn't want to stop. And, I think that I'm annoyed today because I took, one loss in the SPX, 2 losses, 3 losses in the SPY for a little short-term trade. But I look at my portfolio, that's up $7,500. I've had a little P&L swing. I was up like 12 grand earlier today. But point is, I mean, it's just a trade. I was trading like day trading and got in the way, and so I took a couple $100 loss. But overall, the portfolio is still looking good. I was looking at just some fair market value in some of my positions. I'm letting the melt up continue to happen. This price is still bullish until it's not, and I think that's
Yep.
the only thing we need to focus on is stop trying to be a hero and call the top. And I'm I need to listen to myself too, because it's different when the downside happens so fast
Yep.
and the upside is like today and yesterday, where it's just like slow and steady every 15, 30 minutes, hour, just a little bit higher, just a little bit higher. And here we are from the open, up around $3.50 to $4 on the S&P, just super smooth. And looking at the SPY today, I mean, we had an opening range breakout and it just kind of melted up. I look at the futures market this morning. This is something I watch and track every day. It's like just looking at a 15-minute candle right around the futures open. I mean, Nick, you can't ask for a better, cleaner trade. It's like futures breaks out here, goes up. I plot that on my smaller time frame, breaks out here, goes up. You got a clean 40, 50 point run in ES, and you got a clean like 100 to 200 point run on the NQs. So,
Yeah.
I mean, it's just
Well,
one of those days.
And that's the thing, Chris, is this year, I think some of my biggest mistakes have been, man, trying too many times.
Mhm.
Like you said it perfectly, trying to be a hero. So
Yep.
when the market's dipping, I'm like, okay, let's get some extra, sort of alpha on the overall index this year by waiting for it to dip a little bit more. And it's like, is that actually what my system told me to do? No, it's just
Right.
that if the market dips and I'm all cash, it feels amazing. But chasing that high, or chasing the high of trying to like short and catch back up on, it's such a dangerous game, because what ends up happening for me most of the time is that I'm letting my like want to be right outweigh what my actual strategical approach is telling me to do.
Right.
Chris, I mean, I've made this mistake myself this year, but I remember, and I still feel very strongly, that earlier this year we discussed how this might just be one of those crazy melt up years, and it's gonna potentially crescendo into those high risk end game stuff. And to me, I may be right or wrong about this, but right now I lean towards the signal for me to get real cautious will be when the super high risk stuff is blaringly overbought. And that's where I'm at.
Yep, that's a great point. And it's perfect you say that, because we have gone from this super narrow top 10 stocks holding up
Yep.
the entire stock market to finally broadening out and to have a healthier rally, to what you said, if everything is showing
Yep.
green and everything else. And I don't know if this will happen, but if NFTs make a comeback, I think the top is near.
That's a wonderful, wonderful signal, Chris. If we get NFTs back on top, I'm
Yep.
with you. I'm probably going to start picking up shorts. But no, I do think, that is a really, really important thing, is this concept of the risk curve. If you want to talk about this thing is overbought based on valuation, I have a hard time with that one until you get to ludicrous valuation levels.
Yep.
Which let's point to some of the things that are not showing ludicrous levels. Where's the Russell at? The Russell is not in hyperdrive. Like,
Correct.
see Russell in hyperdrive. I want to see Bitcoin do 100K. These are the things that I'm looking for. It's like, okay, really reel back on risk on assets if you start seeing everybody and their brother start piling in. There's a lot of money on the sidelines, Chris, that money markets are sitting on huge amounts of money, and rates are expected to keep coming down. So it's kind of annoying, but I've had to bite my tongue and stay bullish, even though part of me is like, cautiously bullish as always. We've talked about that a bunch of times, but this is me reflecting, because some of my bigger mistakes this year and why I'm not up as much as the S&P this year has been me getting in my own way.
Agree. And I definitely have a portfolio that's tilted to the upside. I think as I look at it today, it's like, I've got ES that's bullish out to 58, 59, and 6,000. I don't need those to hit those strike prices, because they're happening soon enough, as we're in October 9th and they're out to February, March of next year. If we get to those highs, those are going to be profitable call options. And so, I mean, I'm hedged to the upside with
Yeah.
speculative moves on the futures market, and the same thing to the downside, because if this happens fast, my, December, January hedges, if we have a big quick move to the downside, all the option prices will change to my advantage. If we melt up to the upside, and this is happening over the next, Nick, if we have another 5 or 10% to the upside as we come into the election or right after the election, I can close out those long calls way early, and those trades will probably pay $3,000, $4,000, $5,000 each, and that'll
Yeah.
just add in. But it's like I'm out of the money. They were pretty inexpensive, and I did it both ways. So I'm actually typing in a chart. I'll come back to this in a second.
Yeah.
But you'd mentioned the indexes. I mean, the S&P, like I said, notched about. I think this is a 44th high for the year. Take a look at the Nasdaq. We're right back to this recent high we had on September 26th. Not quite there yet. But we saw the all-time highs back in July that haven't been fully recovered. But look, if the S&P is now the broader market that's leading the way, tech could certainly lead the Qs higher with good tech earnings, right? And that's right around the corner. I mean, we kick off financials. I don't know, man. I'm kind of sick of the labor market, the employment, like all this stuff matters. But I think here's the approach. If price doesn't show any disagreement with going higher, then just stay bullish. Like right now we're staying. So, and I know that I have these little 2 to 4 week like windows where it's like, I'm annoyed that I have hedges on that are just wasting money.
Yeah.
But in the event that I need it, I do have it, because you can't hedge in the moment. You can't hedge after the fact. It sucks that it's like managing portfolios.
exactly
You have
what
to
you're
make
saying.
sure you're protected the downside, because an outlier event is going to be detrimental to anyone's account. And so I just try to avoid that crap. But
Yeah.
it's just
No,
frustrating
and
when I know
I
that I
think that
paid amount.
there will definitely be a time and a place where, any hedges that you do have, you're going to be very thankful that you do, because inevitably in a bull market, it will end at some point.
Sure.
It's just been such a tricky thing to try and time. And, if we just really look at this from a big point of view, we're just now kind of really coming out of a few really tricky worldwide situations, right?
Yeah.
The pandemic, mega inflation everywhere, those things are correcting. And I think a lot of just the average Joe sideline investors sitting there with a bunch of cash, and they're like, okay, stocks look like a green light. So that can go on for an annoyingly long period of time. So for me, and maybe for yourself as well, but I can only speak for me, I have to narrow my gaze a little bit on the stock market and the indices and just say, look, it's bullish, stay bullish until it's time to break that trend. But that's strategically, I know that's the right thing to do, but I'm the same way. I start to get nervous and look for problems in an up market, which has inherently been one of the biggest things I fight with within my own trading journey. It's like when the stock market is bullish and wants to run, if you get in the way of it, it's like, that's why they say, the more trades you place for the average trader, it's usually a worse thing for your performance, because most people, they get scared about a headline and they sell everything, or when the market's ripping higher, they chase it. And it's just like, from a tactician's standpoint, I don't even know if that's a word, like a tactical point of view, as a trader, as a money manager, etc. When the market is drifting higher, it is like the opposite effect of gravity. It's gravity to the upside. Stay with it until the gravity machine turns off.
Yep. And look, there's some really simple price action. I mean, day to day, if all you did was look at the daily time frame, if we have, and we've had a lot of chop the last couple of weeks. Today is the first day since the day after the Fed. So this is September 19th, big gap to the upside. This is really the first day that was convincingly making a run above or below. Today is above. So, I mean, I don't think this is nothing. I mean, obviously the day is not done, and we've got FOMC minutes in 20 minutes. Unless this price action today leaves a long wick to the north and shows a rejection, and that's a bit of a trap. I mean, if this closes, as you see the candle looking right now, if it closes where it is right now today, that's a good sign for this momentum to keep going, because another statistic and another strategy really is buying all-time highs. And I know it feels counterintuitive and it feels terrible to buy all-time highs, but this is what momentum gives you. This is what a positive drift instrument like the SPY, like the Qs give you, is momentum begets momentum. And there's plenty of it right now.
It does. And one of my favorite things to trade, Chris, that is not super popular on my YouTube channel is sectors, for exactly what you just talked about. So show my screen just for a second? Thanks, guys. So if I'm looking at sectors, I'm talking about ETFs like the utility sector, comm services, energy, semiconductors is an industry, but you get my point. These are subcategories of the stock market. Okay, so we know stocks generally go up. Why not just buy and hold the SPY? What are we even doing all this for? Well, traders, people who are, clever enough in the markets, can look for exceptional returns by potentially picking certain markets. You know what also is technically a sector, and I know everyone's going to love this because all the gold traders are in the room today. Gold is a sector. Silver is a sector, quote unquote. Just
Right.
where are you going to allocate? We have decisions to make. Gold and stocks go up over the very long term. They can have big down moves. They can have huge down moves. But over the very long term, how much cash you have in your account, which sectors you allocate to, which index you choose to be long if you're going to be long, or gold, silver, copper, oil. You have so many choices out there. Don't let it paralyze you. For people who are listening, keep it simple. A bull market is a bull market, but picking where you want to be is the name of the game. And in my opinion, Chris, I've shared a little bit of my side. I think we're going to do some stupid extension out into the risk territory. So I'm long semiconductors. I'm long NVIDIA. I'm long Bitcoin. I'm long, things that are inherently high risk. I'm not leveraging my account on these things,
Right.
but I am taking extra risk because I think that there's another leg of risk on coming, and I could be dead wrong. For everybody listening, we got 1,260 people watching here. I could be absolutely dead wrong on YouTube, Twitter, everywhere, and I don't care, because at the end of the day, I'm managing my risk like a portfolio manager, which, by the way, Chris actually is a portfolio manager. I am not. I'm just a guy who trades my own account. But my point with talking about this, guys, is that you have decisions to make as a trader. You have allocation decisions, risk management decisions. Don't get lost in the sauce trying to predict every single move in the market. Treat it like a portfolio management assignment.
Yeah. I'm just looking at Bitcoin is one portion of my portfolio that hasn't really taken off yet. If China has a second leg higher, that's good. I can continue to manage some of those profits. The overall indexes, I'm a big believer that I wish I took. I'm going to go back and review a video. It was a podcast that I listened to from this guy that I follow, Charlie Bolello. He does a bunch of like Y chart stuff, and he always has like good data.
Yeah.
If you go back like 20 or 30 years, maybe more than that, if you are a stock picker, you actually underperform like 97% of the time versus just buying the actual broader index. So, and plus, I mean, if we think about it now, from the narrowest concentration that we've seen, still the stock market or the SPY can make all-time highs, to now the broadening of the stock market then justify all-time highs. I mean, this instrument, the Nasdaq, the Qs, has been the best performing ETF over the last 30 plus years. It comes with more, more volatility and more risk and higher drawdowns. But man, when it snaps back, we've seen tech completely outperform in a big way. The Nasdaq this year has stretched up towards 30% versus the S&P up 20%. But obviously, we're at all-time highs in the S&P. We're not at all-time highs yet on the Qs, at least to revisit those July highs. But my point is, having Bitcoin potentially, to be this next leg up. One thing going into November and December, the only time that I can remember in recent memory that we've had a negative, terrible December would have been 2018 into 2019. That was really the last time that seasonality-wise, we weren't just pushing higher, grinding higher through the holidays from Thanksgiving to the end of the year, even into New Year's in the first part of January, as all these new leaps are put on and all these new order flows are put on. The only time that market really crashed was a surprise in 2018? It was 2018 when the market tanked.
I remember Christmas, my dad and I were like,
we had raised rates all year. So think about this. We raised rates all year and the market finally reacted to it at the very end of the year. What are we in right now? We're not doing any of that. We're actually cutting rates right now. So that the cycle's been done for 2 years. We've been paused since 2022, and we officially now started to cut. There's going to be some more cuts. I think the big concern that the market might have, and it's not a bad thing, that the market might not see 200 and 250 basis points of cuts out of the Fed. But we'll probably get another 25 and 25 by the end of the year. And so we'll be sitting anywhere between 75 basis points and 1% lower from September's cut to December. Now going into 2025, okay, so what's inflation look like going into the new year? Is it sticky? Is it not? We have inflation data coming this week. And I think it's going to print lower. It's probably going to satisfy the market and get it all excited again. And honestly, the market might not even care about higher inflation over the next two prints. If we go into November, as we talk about
Yeah.
October CPI, go into December, talk about November CPI, the market might not care if it's the
And it's like,
same
okay,
reading
you're
or
at 2.5.
Yeah.
Let's say it goes to 2 point. Let's say it stays at 2.5. Let's say it goes to 2.6. Let's say it goes to 2.4, 2.3. Does it
Yep.
really all matter? It's pretty dang close.
Not really.
At the end of the day, U.S. economic data is coming in pretty strong. Corporate earnings been pretty strong. And we're getting back to where we started with this stuff, which is don't look for a problem. Wait for the problem to become obvious and then adjust. Like that's the thing with indices. If you look for a problem too much, you'll find one, you'll
For
get out of
sure.
positions, and then the market just kind of
And you'll just
shrugs them off
constantly.
and keeps going.
I do this. I've done
Me
this
too.
all
Me
year, but
too.
it's
I'm
like when I
guilty.
constantly play defense, which there's a reason for it, but I constantly play defense. I mean, I am probably going to sacrifice maybe 5 to 10% of gains this year because of hedging.
Yeah.
It's okay. I mean, and it sucks, but it's like if I still finish the year 20% positive, 25% positive, and I sacrifice a little bit in hedging, I just know that if there was some, let's say August got worse, right? Instead of that August 5th bottom, let's say it got worse, I'd be okay. I would be fine. You
Yeah.
know, and so that's, I mean, I get it. Like to me, it's the cost of doing business. It's unfortunate because, you know, I could just be carefree. It's like, screw it. I don't have to hedge because the market just always goes up. But this has been a year that we didn't really have all these alignments of like, it's a Goldilocks environment. I mean,
It's been a frustrating year, Chris,
Yeah.
because if we're honest about this year, yes, the index level looks really good, but you had the first half, which was just a grind fest for Nvidia, and everything else was left
Yep.
to the dust. So, you know, unless you were sitting in the index or in Nvidia or, you know, some of the other Mag 7,
yeah,
you
the
probably
narrow
underperformed.
concentration was
So
excruciating.
yeah, and then
Yep.
you know the other thing is, like, I went into this year. What saved my year? I mean, again, not my most impressive year ever by any means. I've had a good year, not an excellent year, not a bad year. My biggest call going into this year was actually gold bullishness, which I was so much more right than I even thought. My target by end of year, I remember you and I talking about this actually, was 2280. 2280, Chris. That's over here.
Yeah.
Look how much I can be. You can be right, and then you can be right in the form of being wrong, actually. Like, I thought gold would go up. I didn't think gold would have a outperform massively year. And the reason I bring that up is, you know, a lot of people are watching gold and they're like, oh my gosh, gold is coming down. But it's kind of like China stocks, right? China stocks are coming down, but are they really? They're up still 20 something percent.
Right.
You know, you kind of just have to look at this stuff and say, like, okay, this year's been really good for gold. And we're doing something really important, Chris. Actually, this is a great time to push our free webinar event, because Chris and I are doing something here by dialogue that we want to make sure that we refine and share with everybody who's watching right now. We got 1,500 people. Chris and I are doing a webinar event together. It is free to attend. It's in November 12th, Tuesday morning. I want to encourage you guys, everybody, to come to this event. It is actually free to attend. There's no catches here. Chris and I are discussing basically how to map out and how to adjust plans accordingly to improve your performance. We're doing it ourselves after years in the market. There's a perpetual phase of improving our performance ourselves. So what I want to do here is we're going to drop a link here in the chat. I don't know, Chandler and James, if you guys have this link, the Chris Pulver, TraderNick, best trading ideas for 2025 webinar event. That should be somewhere in the chat or in our Discord, our team chat. If you guys could grab that and throw that, there it is. You guys got it. Thank you, Chandler, James. Register for our free webinar. This is actually free, like no strings attached. We'll probably throw a promo at you at some point within the webinar, but you can actually just come for free and learn something about what Chris and I are mapping out for our own trading plans 2025. And I know I'm taking this webinar super seriously, Chris, because I need to do this, right? Going into 2025, I need to map out, how do you play a market that's gone ripping all the way up? Gold, stocks, everything's up. How do you map out the next year to still be successful?
Yeah, I mean, when you end on a potential high note, it does make me, truthfully, it makes me a little cautious going into like Q2, Q3 of 2025.
Yep.
I think that, what we don't know is we don't know what a black swan event's going to be. We don't know if there's geopolitical things that spill over that get way worse. We don't know if, a new president, new administration, higher inflation, all these things that we've talked about can be they could be packaged up, put a bow on top, and that is the market. That's the market catalyst. Like, that's what it is. But there could be 100 things that are potential, and one of them is going to be like what's tagged as like that's what it was.
It's like
Remember
you said in 2018, where it's like delay, oh, drop.
Yep.
I remember that
Yep.
very well.
And 2020, like I was bearish going into 2020, not because of COVID, but because we had a Fed put. Like, as soon as the market crashed in 2018, January 2019, it was a backstop by the Fed, and they immediately started to phase out, cut rates, and the market ripped up again to all-time highs. I'm like, this is ridiculous. And so I saw the same overbought conditions with divergence, and I was bearish going into 2020, and we had a 35% crash with COVID. Now, COVID was the bow on top package that said this is why the market crashed, and obviously a lot of things changed. But moving forward, nobody knows what the catalyst is going to be, and exactly. So I think we have to be ready for things. But like I said, at the end of the day, I know for me, it's like I'm going to sacrifice some performance by just making sure I'm playing a little bit of defense. I think that's really important for me as a manager here. But the reality is, what do we see in price right now? Just live stuff. I mean, price is down. Just a quick, dollar as we're 7 minutes away from the news. I don't think anything was leap with these FOMC minutes. By the way, just real quick on that webinar for the 12th. That is going to be a private, like offline webinar, but you're all welcome to attend for free. Just make sure you register for it. So we're not going to run that stream like we do here, where it's free for everybody and just come into the YouTube channel. That's going to be a registration only event. That's correct, right?
That is correct. And yeah, that helps us to, scan out people who are serious, and that way we can take questions from the audience and make it kind of more of a private group. So if that is something that you're interested in taking seriously, one thing I would recommend, use the registration link. We'll drop it again here. The chat's moving real quick. Make sure to register. Also, set your calendar, like send yourself an email or something, like don't miss it. Because a lot of people will sign up and not make it to the actual event. I'm telling you that will probably some of the most valuable content I think I'll be a part of this entire year. That will be really, really big stuff. So
it's important. It's an important time too. It's like, look, you and I will talk about what we're doing for the rest of this year, and I don't expect the market to disappoint for November, December. I think the market's got its blinders on. I think the market, as it broadens out, there's a lot of good things that the market will have: seasonality, order flows, Vanna charms, you name it. This is all good stuff to have the market just kind of blindly go up. And the melt up is great. Everyone should be benefiting. Don't be a bear. I mean, unless we see price actually making the confirmation breaks that we're talking about here, there's no reason for us to be super, super bearish when evidence is suggesting it's not there. There's no price action that is suggesting it. And even right here, I mean, even if we get into 600 plus on the SPY, Nick, I'm not necessarily going to turn into a bear, but I do think that getting into, let's say, this trend line eventually, let's say that we have this as a melt up. If this market melts up, I think I'm showing my screen here. If it's melting up here into the 600 plus zone, even a trend line break doesn't necessarily mean bear, but if we create a top, a range, and then a break, that's when I'd start turning more bearish in the near term. But until then, this market has plenty of upside potential, and the posture is all bullish right now.
Yeah, no, I hear you. Chris, do gold for us, because oh my goodness, people in the chat, can you guys take a chill pill? My goodness. Thoughts on gold? I mean, actually, what we just explained, Chris, this melt up environment, we're talking about stocks, but it matters to the gold traders too. We're talking about like this Goldilocks scenario, which, if the Fed's cutting rates quickly, gold loves it. But if the Fed slows down rate cuts, I'm leaning a little bit more cautious on gold and into the turn of the year. I mean, gold was my number one, convicted pick for this year, which was right. Did I play it perfectly? No, I got in and out a little bit too frequently. But at the end of the day, things have changed going into 2025. It looks for now like this market just wants to drift higher on the stock side, which is out of the confidence that we see. And that's putting some pressure on the downside on gold, at least currently. Would you agree?
And the dollar rip into the last 4, 5, 6 trading days, that's certainly put there's a correlation. It's gold versus dollar. So when you see gold having lower highs, lower lows here for the last 3, 4 days, starting to roll over on itself, the dollar, I mean, let's say the dollar kind of initiated the run out of the gates, right? The dollar just ripped up for 4 or 5 days. Gold didn't really do anything, and then now gold is starting to kind of catch up with that dollar move. So dollar goes up very aggressively, pauses for a couple of days, goes up to fresh highs today, and gold is just slowly, rolling over a little bit. Now,
Yeah.
I do think the dollar, if it continues to catch bids, gold is going to have some pressure on it as well. But if I look at the chart, I mean, I'm still bullish on the dollar. I don't know how you want to look at this one technically. It is higher highs and higher lows. You've got
Yep.
support way out here. You've got support even inside this. You have support even inside of this. If I take one more aggressive trend line here,
Yep.
even this low to that level, there's plenty of support. And all I'm looking for is let's see if price can come back and find it. Previous high,
Yeah.
previous high, previous high. Lots of structure here. And let's see if gold can catch a bid.
I think that's how I feel too, Chris. I'm like, okay, Fed's going to cut rates, and that makes gold still attractive. They're still going to print $1 bajillion no matter who's the president.
Yep.
So I like gold secularly on the bullish side. However, you just drew those trend lines, and I pretty much kind of see the same point. Like short term, some strength in the dollar could trend gold back on the lower time frames back towards some of those areas of support.
Yeah.
So as a longer term bull, I think for me, I stay patient, and as a short term trader, 4-hour chart, 1-hour chart, guys and girls, looking more a little bit on the bearish side in the short term, a little bit more room, I think, to come down. So definitely worth mentioning, guys. We're about 1 minute out from the FOMC meeting minutes being released. Chris and I are going to be here watching the reaction. We've got all your charts pulled up so you can just see if there's any sudden movements. We've got stocks in the top left. The left-hand side, Russell, Dow, S&P, NAS. You got gold, silver, dollar index right here, and oil here in the bottom right. I've got positions on a couple things. I know Chris does as well. While we wait here, I just want to mention that we are doing a sale here for the FOMC day. We're doing 25% off the Chris Pulver trading signals or my trading signals. Both of those can be purchased on our website. If you want 25% off, the live chat link right here is your best friend. Send a direct message to our support team. We got some real people here in the office who can hook you up with that discounted offer for either Chris Pulver's trades or my own trades. They're both available 25% off today. Click that link, chat with a rep, and they'll get you set up with a membership inside of our Discord. Every trade comes with full breakdowns, analysis, all that good stuff. Got about 20 seconds to go here for our breaking news. Maybe we'll play our little breaking news clip here. Here we go. All right, countdown begins. Got about 10 seconds here. We'll see if anything gets pulled up. Guys in the chat, if you guys could do us a big favor, if you see any headlines, Chris, if you got financial juice, whatever we can put together here to just keep an eye on what's coming out of meeting minutes.
Looking at it right now, Dow Jones up 400 points. I mean, we've got a pretty good melt up today. Broader market, S&P's up. S&P's flat near the highs after that $4 or $5 move. 573 to 577, just shy of a $4 move today. Sideways at this time. I still have some gamma levels up to the upside. I actually did a little flipperoo on my gamma play today. I dumped my my long puts on the SPY, and I'm actually going a 580 long call to see if CPI and PPI by Friday can actually stretch this market into some all-time highs.
Yep.
Price action wise, you seeing much on your end with all those charts there? I'm looking at the S&P on mine. I don't really see a lot going on here.
Not a whole lot of movement here. Not seeing anything just yet. Dollar index still holding its gains here today. Everything else is kind of flat for now.
Interesting here, Nick. Near record foreign demand for tailing 10-year auction. I mean, that's another thing. That if the U.S. is continuing to get like good auctions, then I just think it cements like the U.S. is in a healthy place right now. And I said this yesterday on the show. I listened to an interesting podcast where they talked about instead of this like late cycle extension, not really expansion, but late cycle extension. If the Fed is able to navigate this soft landing, no landing, it's almost like we reset the clock and we go back to mid-cycle.
Stay where you're at. Yeah.
Like we go back to mid-cycle and we have more upside for, I mean, nobody knows the timeline, but let's say the next 3, 6, 9, 12 months before things get really, really dicey. But I think that's impressive. I mean, I've been watching the bond auction simply because if we have a failed bond auction, I was just, by the way, Nick, are you still long TLT?
I'm not. No, I don't. I took profits on it.
Yep, I did too. I did. I mean, I'm pretty happy overall. I got out around the highs. So we had a recent high around 101, and I was protecting profits right when it came back below $100. And so I was long at like $82 with a call, and I was trying to get it called away at 105. That was my measured move here, and I might still maybe participate in TLT. But I also think that if it's a wave cycle, if this is the low, we have a swing, We come back into the same level around, let's say $90 or so.
Yep.
If I want to reestablish another TLT long, I'd probably start there.
Yeah, I don't
But
hate that either.
I honestly, that might be about the trade on TLT that I like. Otherwise, screw TLT. I just rather trade gold and silver because
Yeah.
historically, if you had a portfolio that was a 60-40 and your 40 allocation was gold, it's the same performance. You
Yeah.
still have the same type of downside protection. You still have the same hedge. And
You don't
I
have
know
the default risk as well.
exactly.
So,
Exactly. You have
yeah.
a global utility or store value that I think would be a little
Yep.
bit better than
I like that. I
us
like that.
printing
Like
into
some
oblivion with
just
eventually what we're
allocation
going to
gold.
do.
I know Ray Dalio's big on like having a 10% allocation just permanently. But
Yep.
anyways, guys, answering some questions here because we have a bunch of people asking what's going on. Where's Jerome Powell? People often think FOMC meeting minutes are like a press conference. They are different. So
Yeah,
we are
just
not getting
minutes.
any sort of speech from Powell here. This is a release of notes. We got Forex James in the chat. Thanks, James. So what's happening right now? We're getting a document basically of notes from a meeting that the committee had on the Fed side. So we're not getting some big speech. And the reason we're not getting a big spike, where's the spike? I can't trade anything. Well, it's because this is not always a big event. Sometimes it's big, sometimes it's not. It's a red folder event because it has the potential to show surprises in the notes that were taken. So Fed minutes. A few participants added a 25 basis point cut could signal a more predictable path of normalization. Okay, so a little bit of
They're
a
backpedaling on September, by the way. They're trying to say that some participants noted they would have preferred a 25 basis points cut at September's meeting, and a few others indicated they would have supported that. So basically, like, we acknowledge we may have cut too much with 50. But
okay.
it doesn't change anything. I mean, it's not a bad thing. It's more like, yeah, we seeing the data we have right now, it's like honestly, labor market's gotten better, right?
Yeah,
I mean,
I was going to say convenient after hot jobs data, they go back and say, actually, might have done 25.
Yeah, like we could have done 25. It would have been appropriate. It's like the market was calling them idiots for not cutting in July, and then they cut 50 in September. And I really think they cut 50 in September because it gave them this cushion to let the news just roll in, and they've already made that aggressive cut where the market's like, okay, there's a little bit of padding as opposed to they didn't cut enough. They didn't cut in July. They didn't cut enough in September. And the market again, like, perpetuates that rollover, but it just didn't happen. Like the data was fine. Non-farm payroll was a big one. Although there's probably going to be revisions to it because most of those created jobs for non-farm were government jobs, and that's not necessarily a good thing, as we had a revision this year of 818,000 jobs less than what was stated. So we can say that we're overstating or inflating the job numbers with NFP, especially when the government jobs.
Yep.
So staff outlook for September meeting was for economy to remain solid. Forecast for growth second half of 2024 is marked down, reflecting softer than expected labor conditions. Remarked reducing policy restrained too much or too soon could risk stalling or reversal the progress of inflation. So I think the Fed has pivoted back to employment seems stable. Now it's all about inflation. But the Fed is not nearly as restrictive as it was, Nick. I mean, the fact that they're talking about cutting is not restrictive. Even cutting, I mean, I looked at the Fed Watch tool. Unless this changes on us like literally today or tomorrow, there's still a 75% chance the market is going to see a 25 basis points cut for November, which is November 7th, 2 days after the election, and then another 25 basis points at 71% probability for December. So if the Fed stays with that, we're going to see 2 more cuts. But what do you make of the yields? Like the 2-year yield has just gone bananas from 3.5 all the way up over 4%. We're half of 1% off the lows on yields, and the bond market has turned over because of the inverse correlation. So yields are definitely up and sticky, and the 2-year is supposed to be the neutral rate, and the 2-year right now is at 4%, dude. So we're trading at 4.75. Like, my gosh, we're really not that far off of the neutral rate, to be honest. We're really close to it. Within 2 cuts, we get to 4.25 by the end of the year. Dude, we're close to like getting back to the 2-year yield, and that's, I don't know if that's a good thing or not.
Yeah, actually, so it's a bit of a, going back to our higher for longer conversation. This pop in yields actually made me more bullish in stocks because it's coinciding with, of course, all the uptick in U.S. economic data. My biggest concern has and still has been the fear of fast rate cuts on fast and impending recession.
Right.
And it's like you're talking about the late cycle stuff. I mean, if we're just going to stay in this economy's chugging, which prompts more economic chugging to continue, if that's where we're at, it's been the theme the last few years. Higher for longer, Chris, in my opinion, is not all that bad. And we've talked about that many times. Slow rate cuts because the economy is just doing its thing and corporate earnings are growing is an environment I can live with. What I'm more terrified of is rapid rate cuts off of jobs falling apart. And then at that point, it's like, oh, look,
Yeah.
inflation's coming down. Well, it
Full-blown
doesn't even
recession.
matter. You lost everything else.
Yeah. Yeah. And I get it. And the Fed or the Fed reacting to something terrible in the market and, losing control of one of their mandates.
Yeah.
This is not normal for the Fed to get it right. They usually come in to react to something that's breaking. And so far, they've been super freaking lucky that nothing is broken for them to step in. The last time they really had to step in a big way was the regional bank crisis in early 2023. They pumped it full liquidity immediately. And, they have tools. And we know that. We know that they have tools. The government spending on top of that, the Fed as a backstop as well. And, cutting rates is fine. I mean, I just think that there's not really a lot of wiggle room. If the 2-year is going to be at 4% and we're already sitting at 4.75, there's not a lot of restriction left. If we get down to that 2-year and we're sitting right around 4%, the Fed is done cutting in maybe 25 to 50 basis points, because outside of that, then it's like, what is inflation doing? Because if inflation stays within 2 to 3%, I think the market just hums along. We burn a little bit hotter from the economy side. But if inflation gets back above 3%, the Fed's going to start probably just talking about pausing again. That might
just
be
staying where it's
2025.
at.
Yeah, exactly.
Yeah, I think they want to cut, but they don't want to cut too much more so that they can have. And I've heard Jerome Powell say this. They want to get to a point where they don't want to go right back to where we were with like rock bottom rates, because that gives them no ammunition to protect themselves in a bad situation. Remember, rate cuts, for everybody listening, are a measurement of defense for the Fed to sort of backstop and save the day. But if they have nothing to give because rates go way, way back down, they don't like that. It's a vulnerable situation because you're already at max stimulus and you have no further stimulus. So I think, we could enter this environment where it goes back to, you want just to be long, companies and things that benefit from rates not necessarily coming all the way back down, but generally being okay. Also, just a quick heads up, I mentioned this earlier, but for people who may have just joined the stream recently, we're currently doing a 25% off discount for this stream, which is ending kind of soon. So if you guys would like to get access to the signals being shared by myself or Chris Pulver, we have, of course, he's with us here today. We have different signal services available inside of our group. If you'd like information about the live stream discount, if you send us a direct message using the link being dropped in the chat right now or in the description down below, you can join us and get a huge discount. It's 25% off while the stream is going on. Chris, if you'd like to keep going for a little bit, go for it. I've got a meeting I got to jump off and hop onto pretty soon. Do you want to take over for a little bit? Got 2,600 people watching with you.
Yeah, that's cool. I'll hang out for 15, 20 minutes. Let's talk.
Okay.
Let's talk some stuff.
Sounds good. You got it from here.
Okay. Thanks, Nick.
All right, man. See ya.
All right. Bye. So, all right, minutes coming out. I'll just highlight a couple more things. If there's anything on the report, I posted a link earlier. I know it's probably been lost in all the chats. Let me see if I can find it here. So this is the actual quick summary. Federal Reserve on Wednesday released the minutes. And what do we have here? That's it. I was looking for the actual minutes. The minutes can be, okay, here we go, on the board's website. Here we go. Annual report, January, April, September. Where the heck did it go? Transcripts, other historical materials. You know what? I don't feel like searching for the FOMC stuff. Let me just read some headlines with news. That's what this is for. Generally said it was important to communicate decisions are conditional on evolution of economy, implications for balance of risk, and therefore not on the preset course. A few participants added a 25 basis points cut could signal a more predictable path of normalization. Nick said that earlier. They kind of backpedaled, saying like, "Yeah, we admit we probably could have gotten away with a 25 basis points cut in September, but they didn't. They cut 50. They're not going to backpedal and say, well, we're not going to raise rates." It's like, I don't think, according to the market right now, the Fed is necessarily going to pause. I think there are still going to be another couple of cuts coming by the end of the year, and then as we get to the new year, let's see where inflation is at. I do wonder in the background if couple things, right? If the markets are at all-time highs and continuing to go to all-time highs, higher asset prices, it's not so much inflationary with the higher asset prices. It's way more inflationary if we have higher commodity prices. So one thing we can take a look at here, let's look at the like Bloomberg commodity index. Where the heck did it go? Here's commodity index futures. Let's just see what this looks like. So we've been in a decent drawdown. We could be bottoming out here, but I think China's going to have to be a big part of this. And the situation in China is, they've always been like a heavy commodity buyer, and that has gone away the last few years, especially since COVID. China's policy, fiscal support, government support, all those things have changed quite a bit. This year it's like I probably went out a ledge and I was doing something very contrarian, but actually being long China this year. And, I did a lot through options. I had some ownership. I'm seeing some profits for it now, but I hope there's a little bit of follow through. Otherwise, commodities as a whole have been down, let's say 25 to 30%. I don't know if we're going to have necessarily a bull market, but even if we go into something like this, where the structure might just be bottoming out, maybe coiling, something like this would look pretty good for like a rounded move in commodities. And then obviously this would be scary, right? This is inflationary. If commodity prices start to increase as a whole, that is not a good thing. That's inflationary. Asset prices in the broader market, the S&P, the Nasdaq, the Dow, the Russell, those asset prices going up aren't necessarily inflationary. That's just the positive drift in the instruments that are, getting the cream of the crop, the highest concentration, the top 10, the top 20, the top 50, the top 100, whatever it is. And a broader market rally is also good. So it's going to be interesting. I talk about the JNK as a potential for, are we really at risk? Okay, so this is the high yield bond. This is a difference between like AAA, triple B, triple B, triple C. We have been down since this high right after the Fed on the 18th, 19th. The JNK, this is the Bloomberg High Yield Bond ETF. This is down a little bit. Now, we're not breaking any new lows. Every time we've seen a decent move, like we see here, it actually picks back up. So I'm not necessarily looking at this to be like, oh my gosh, we got to be careful. But if it takes out a low and shows a dramatic move lower, I'd say if this is back below, I'm not sure what this price is, 90. If we're below like $96 or so, I will take another look at this and say, okay, we're actually seeing some maybe loosening credit conditions out there. Which all this means is if this goes lower, that means that volatility is up, lending conditions, borrowing conditions, credit availability is getting much, much tighter and more restrictive. And that's not a good thing. That creates a lot more friction in the U.S. economy and a lot more friction in the global economy. So that's the potential scare that we could have if this thing gets a little nasty to the downside. But right now, I don't necessarily see it changing. Jobless claims, the U.S. side right now is okay. China as a whole had some gaps lower, but let me check the candles really quickly. So Alibaba on the day, gaps lower, but actually fills it. Gaps lower and fills it. Gaps lower and fills it. K-Web gaps lower and fills it. I sound like a broken record, but we've actually had some green candles on the day, and I am wondering if this is a bull flag. Right. So we had this move to the upside, a quick pullback. If this is going to be a bull flag type scenario, there's more stimulus, I believe, that will be discussed on October 12th, which is only a couple days away. That should be this weekend, right? The 11th is Friday, the 12th is Saturday. So we may come into trading next week with a little bit of a boost if animal spirits are at least supported and stable in China once again. So I'll keep an eye on that for next week. Everyone's wondering gold, silver. I still like silver more than gold, and the reason why is because gold's hit a lot of my profit targets. So now I'm just waiting for pullbacks on gold, but silver, I still like the structure. I'm heavier in silver as far as positioning. I'm trading futures as well as the actual ETFs. There's corresponding. I'm not in any leverage ETFs. A lot of traders have asked me, what about this double leverage silver, double leverage gold? I'm not in those. I'm in single leveraged. I'm in SLV, GLD. I'm in PHYS, and I'm in CEF. Those are the ETFs that I'm trading, and then I'm trading GC and SI for futures. Bitcoin, MicroStrategy had an interesting week. We're trading up to 192, another retest of today's highs. We are very close to making all-time highs on MicroStrategy, which is a pretty impressive move. I'm just trying to be patient on MicroStrategy. I don't necessarily want to dollar cost average this thing at the highs. I'd love a pullback. I hope I get one. If we pull back into this midpoint, I might start with just, if you're in my Pulver alerts, I might start with this. I might just put in $1,000 here around $160 and then put in another $1,000 here around 120. and then dollar cost average. So my break evens around this area, and then look at the upside. And I don't know. I mean, maybe just getting into a couple levels, but I have a hard time justifying buying it at the highs because it is a bit overvalued. So if I take ownership, I'm trying to own MicroStrategy less than $100, but it has knowingly become a stock that resembles and correlates to Bitcoin. A couple of the ETFs that I trade, I'm in BITO, trying to see if we'll hold this $16 low. I'm in IBIT with some trades as well. IBIT is the BlackRock ETF that some point in the near future will be approved for options trading. It's not approved yet. If we look at IBIT, this is still pending approval from the CFTC and the OCC. So this is not available to trade options, but BITO is. FBTC is also not available to trade options. So you can trade the ETFs, FBTC, there it is, and no options available yet. I don't know if the FBTC one, which is Fidelity, I don't know if that has been approved for options trading like IBIT has, but a couple things to watch as this happens. Now, a couple other things I think are interesting that traders should get ready for. This is something Nick and I will talk about or for that November 12th webinar that we're going to do. Are you prepared for a 24-hour market? How many of you are prepared for a 24-hour market in stocks, in options? Anybody? I think you should be, because it's likely going to happen. I mean, right now we have FOREX is a 24-hour market, 5.5 days a week. Crypto is a 24/7 market. The options market right now is opening bell, closing bell. There's obviously a lot of moving and shaking post-market, after hours. Retail traders are limited. There's some brokers that let you trade a little bit extended into the close or a little bit early. So maybe you can start trading around 7 or 8 a.m. Eastern time. Maybe you can trade up until 4:30 or 5 p.m. Eastern time. But for the most part, we're stuck with a, opening bell, closing bell reality. And I do wonder if the evolution is going to be the stock market ends up going 24 hours, 5 days a week or 5.5 days a week. And then we have options, which will be recalibrated to that timeline, and the premiums and the credits and the debits and everything we're paying for. It's like we're paying for more open time, perhaps, or maybe not, because it's already included with the price of you're just getting limited trading hours now. But if you are paying that premium for more trading hours, I'm just wondering what the liquidity pockets look like. And also on top of that, we have 0 days to expiration for most indexes, right? So every single day you can trade the SPY with a 0-day expiration. Every day you can trade the Nasdaq with a 0-day expiration. The Dow is not there yet. The Dow is still a weekly expiration. Okay. The Russell has been sprinkled in. Now we have 0 DT on the Russell. So we have the Russell, the Nasdaq, and the S&P all with 0 DTE, which means every day there's an expiration if you want to trade short term like that, which I don't think is a bad thing. This has created a lot more liquidity and stability in the markets. Option flows here are pushing as high as 50 to 55% a day are coming in the form of 0 DTE. So the reason I'm saying that is because this will continue to evolve into, it's not just going to be the indexes, but expect this to be your Apples and your Microsofts and possibly your Googles and your Nvidias and maybe your Teslas, right? All of your crazy liquid, high volume stocks, large market cap stocks. I wouldn't be surprised if this goes into a 0 DT environment. It's not necessarily more profitable. It just means it's more opportunity and more order flows. And I suppose it's good for the business. Since 2020, trading has been a pretty hot commodity. Like literally, there's probably more traders now than there have been before. I mean, the option flows, the option volume has increased exponentially since 2020. It doesn't take a lot of money to trade options, which is attractive. It doesn't take a lot of money to trade futures, which is attractive. It doesn't take a lot of money to trade crypto, which is attractive. We have 0 commissions now for some of the brokers out there. We have super liquid instruments, and we have fractional shares. I mean, if you think about all of the tools and resources that you have, things like the Edge Finder, that's just fundamentally based, and you can take out a lot of the guesswork and just follow data. The tools and resources for retail traders continue to get better and better and better. And if the market continues to evolve, which I'm confident that it will, that's a good thing, right? So I embrace the changes, and obviously I'm going to do my best to adjust and evolve with them, because I'm not going to be stuck with, no, I only trade this way. It's like, if the market's changing, I got to change. Market's always right. I'm not. So if I'm not going to evolve and adapt with the market, that's my fault. So I'm not going to be stubborn. I've seen it too many times with people I've worked with in the past that have a bread and butter strategy that was really, really good and really successful, and it's good for a couple years, and it's like the lightning in a bottle, and then it fails, and then they start to get stubborn and they start to double down, and they can't change, and they don't realize that the market's not the same anymore. And I've seen too many traders get super, super stubborn. So I guess my PSA for the day is, trade with an open mind, because if something's not working, it's okay to just shelve it. It's not like you have to get rid of it, discard it, and say, this is a crappy strategy, it'll never work again. But just trade a little bit smaller, take the risk out of a little bit, and then just shelve it. For this, if we're in a trending market, be a trend trader. If we're in a sideways market, be a range trader. Okay. I trade options on all this stuff so I can position myself. So if we are trending, I can take advantage of that. If we are going sideways, I can still generate income. Whether we're going up or down, I'm trying to make some moves. So there's all sorts of strategies out there to use, but being nimble and being open-minded and having a strategy that you can trade. If we're going up, you got some strategies to trade. If we're going sideways, either you're waiting or you equip yourself with strategies that can generate income as the market sideways. If we go down, same thing. Do you have strategies to benefit in all these different market conditions? I hope you do. And if you don't, think about it. And that's what Nick and I'll be talking about for that November 12th stuff, is what are we going to do with our own portfolio, our favorite strategies? How do we tweak and modify and adapt those to market conditions depending on what we get, right? All right. Good stuff. Okay. So looking at the market for today, it's been pretty sideways here the last maybe couple of hours. We peaked out right around 11:50 p.m. and then noon onwards, it's been pretty flat. I don't want to take the afternoon risk. I'm tempted to get something in by the end of the day on the SPX. I mean, I can look at this right now. It's tempting, but I don't want there to be any outlier risk if there's any direction. So if I looked at this right now and I did, let's say, we're trading at 77. If I went up 20 points, and 77 go down 20 points. I can still grab some credit here, but it's going to take me all the way into the close, most likely, to get my profit. So I could still grab a quick like $1.65. My risk would be, let's see here. There's a lot more risk in the trade. So here's what I don't want to see. If I take that trade, I'm going to be risking about $1.65. If there's a big move down or up, my trade's going to be at risk, which is why I'm not going to take the trade. I was just curious, if I look at it like, if we stay sideways, I wouldn't be surprised if the market just, calmly comes into the close and FOMC minutes today were a bit of a dud. But going into tomorrow's CPI, hopefully that's a mover and a shaker. Hopefully tomorrow's CPI, if it comes out positive, does this market gap up $3, $4, $5 tomorrow? If so, my 580 call that I have in the SPY, I paid $1 something for it. Let me double check my numbers here. I put it in my index trades. So it cost me $1.41. So if we have a gap higher tomorrow and my debit's $1.41, if it's trading for $2.50 to $3 by the time we open tomorrow, I'm going to take some profit on that. Okay, so I'll keep an eye on that one for tomorrow. This is starting to fill up a little bit to the upside. I want it to be a little bit bigger on my gamma squeeze index. I want it to be a little bit higher as far as the current net. I'd love this to get up to like 7, 8, 900 net to show that there's more and more order flow pushing towards that magnet spot. But we'll see. So tomorrow, a little sideways, but to me, this is postured pretty nice for if we break higher, we go higher. If we break lower, then sure, we can give back some. There's lows, there's gaps to come after. But after kind of stabbing today's high, and it looks like we're going to close there, then it seems to be pretty solid, right? So we've officially broken from Monday's sell-off. Monday just set up for a nice little fake out, and we are up towards these highs. From low to high, the SPX has gone up around 100 points. So that's got to be close to about $10 from low to high in the SPY. Is that correct? Let me check here. From low on Monday to the high today, we are up around $10.36. So now that I see this past resistance, is this able to offer up a little bit of a pause? Okay, do we slide back into this level here? Past resistance becomes support for another nudge higher? Quite possible. So if CPI data comes out good, meaning we're forecasted for 2.3 for tomorrow. Okay, 2.3 is the year over year. I'm curious if we're going to see month over month a little bit higher or lower. Core CPI excluding food and energy, are we going to see it higher or lower? And then the year over year print, which has been the big trend, are we trending lower? So you go back to the graph here. Let me zoom in. Okay, if we zoom in, we had sticky inflation for about 12 months, and just recently, the last 1, 2, 3, 4, the last 4 prints we've had year over year have finally started to show that our trend is going down. So we're sitting at 2.5. If the market digests a 2.3 tomorrow, that could be seen as a good thing. Okay. I don't know if we're going to see actually 2% by the end of the year, but who knows? It's going to be month by month. All right. All right. Bitcoin. We talked about Bitcoin. I still like Bitcoin for accumulation. I'm still waiting. Okay. I mean, I'd love a retest of Bitcoin back into the low 50s. And I will probably add, dollar cost average into some of my ETFs, and I will probably trade a couple of credit spreads on Bitcoin futures. Gold we talked about. We beat up gold and silver all day today. CPIs tomorrow morning. Yep. So I mean, it's just going to be the newsprint. What I'm going to be watching for is pre-market. So I'll take a look at the futures market. What's the reaction going to be for CPI tomorrow? And I will adjust. I'm going to go ahead and delete this here. And delete this here. These are, I open, when I look at my 15-minute candle on the futures feed, I'm just looking for simple breakouts during the morning. So ES, if it breaks out after a 15-minute candle, this is 9:30 to 9:45 opening bell. I'll just wait 15 minutes before I place any trades. We get a nice simple breakout. Qs, the Nasdaq did the same thing. So NQ, ES did the same thing today. They were right out of the gates, just nice steady uptrend and nice steady uptrend. So pretty simple trades in the futures market this morning. Tomorrow morning, does futures have a reaction with CPI? Quite possible. The SPY is likely going to have a gap higher, gap lower. It's going to be a bit of a mover because it's pre-market, right? This is 8:30 a.m. and this is before opening bell. So we're going to have some moving and shaking right before opening bell. And I mean, it's forecast for 2.3. I wouldn't be surprised if it hits there, but that might be one of the lower prints we see in a while. But it's not going to matter because once this comes out and the market's satisfied with it, the market's not going to care about inflation until next month. And we've seen this mixed before. We've seen CPI data be good and then PPI be mixed, or one's positive, one's negative, right? And the market just does what it wants. So if it prints 2.3 or better, the market's probably satisfied. If we print 2.5, 2.6, maybe the market pauses. I don't know if the market sells off necessarily, but yeah, I mean, I think it's going to be a gap. Gap up, gap down. We'll watch and see what happens tomorrow. Okay. All right, Nasdaq. We're sitting here. Nasdaq's made a pretty good run for the week. Our recent highs back here. These aren't all-time highs, by the way. All-time highs on the Nasdaq are even further back into July. But we're getting close. So if we take a look at this chart on the Qs at NDX, I mean, we've made a break for this. Now, I've said this on the NDX for a little bit. I mean, if this is a swing and this is a low to high, higher low to higher high, we could come right back into these highs again and range trade. But I'm not calling the top on this thing because the reality is we have a low, we have a higher low, we have a higher low. If this market is starting to pick up steam, I wouldn't really turn into a bear on the NASDAQ until this were to break. If this August 5th low and that level breaks right there, then I'm a bit more concerned to the downside. But until then, to me, if this proves it wants to go higher and can go higher, then we're looking to buy and spend some more time in this and see if we eclipse the all-time highs. And then the NASDAQ's in open space again with the momentum taking it higher. But if this is going to have to turn south, it's going to have to be show us resistance means something, and then roll this thing over to the right side of the trend line and then see if it actually breaks and goes lower, similar to what it did here. We went all the way up here, went sideways, 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 then rolled over, and there's your correction. Went all the way up here, sideways, 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 and then finally started to break lower, retest, and go. I mean, price will be the confirmation. And if you're a bear in this market, confirmation is going to be way better for you than trying to guess this, because I think this market's going to find a way to shrug off a lot of crap and a lot of reality and just remain somewhat irrational to the upside. Wouldn't surprise me. Okay. But am I bullish right now? Not really, because if this stays sideways, well, we're still sideways. right? SPY makes a new high today, yippee skippy, but the Dow is not at new highs. The Qs are not at new highs. The Russell's not at new highs. We just have a green day, but it's not all green. We go to, let me go FinViz here right now. Looking at the advanced decline line, we got about 53.5% of stocks up. There's some mixes in. There's looks to be mostly green, but nothing really outlier. Pfizer up today. What's Pfizer doing? I see bright green on Pfizer. Hey, Pfizer, what's up? That's a good thing. So couple things to share here. So my Pfizer is up a little bit there, uncovered, and then my other positions. Pfizer is in with a diagonal spread that's likely going to get called away at 29.50, and that is, I think, next week. I'd like to be this week, but Pfizer is up $21,000, and I have some shares of Pfizer which I'm willing to hold. Next Friday's expiration at 29.50 could get called away. Am I interested in doing a quick roll for 1 month? Let me see if there's earnings on Pfizer really quickly. We have earnings on the 29th. I could probably sneak in one more roll. Let me check this out really quickly before we go. I also have another session at the top of the hour, so I'm going to wrap up here in just a few minutes. All right, so if I get it called away at 29.50, that's fine. I'm looking at some decent profits here. I'm up around $21,000. I would like to see if I can roll this. If I take this 29.50 and roll, I can get another 15 cents credit if I go out an extra week right before earnings. So if I did this and I can get 15 cents for this roll, this would give me $150 of extra profit. If I roll it down, I can only grab an extra 5 cents of profit because I'm rolling down by 50 cents. I'm getting 54 cents of credit. If I roll it up, I've got to pay 16 cents to roll it to increase by 50 cents. So I'm going to net 35 cents. I'm better off doing either nothing or going out through earnings, which if I went to November 1st, let me see if I can roll it. Hang on a second. Let me roll this out. So positions, 29.50. If I roll this out to November 1st, so I'd only get 26 cents there. If I roll it up to $30, I get 15 cents credit and also increase my profit by 50 cents. So to me, if we're going to do it, I might roll it up one more week, or I should say out one more week, keep the strike price the same at 29.50 and try to get 15 cents credit. If I can do that, then it increases my profit by another $140, $150. And I do that on 8 accounts, I'll generate an extra $1,000, right? So let's say $140. I make another $11.20 on the trade, which puts me up around $22,000. I don't want to get too cute with it. I'd like it just to get called away as is. That's been a pretty good trade. And Pfizer, for the most part, hasn't really had to go anywhere. But I'm sitting on this one, and I'm holding it a little bit longer term for some of the ownership to try to get back in the mid 30s. So I'll hang on to that one for right now. But the diagonal spread that I've done, I'm ready to kind of dump that one and get rid of it. Okay. All right. So let's see what we have coming into tomorrow. CPI news at 8:30. And we'll take it from there. So thanks a lot for being with us all day today on the stream for A1 Trading. I'm actually going to go live again at 3 p.m. for a final hour session that I run on my YouTube channel. And we'll be back at it tomorrow. Okay. Good stuff. All right, everybody. Take care. We'll see you soon. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you